All right, sit down, tune in, turn on. It's about that time. Let's go ahead and get started. Hopefully, I didn't startle anybody too much over there. We'll start kind of informal. My name is Don Kaufman. I'm going to be with you here for probably about the next 90 minutes to 2 hours. Please chat in. Let us know that you do hear us all right. You might even see me here momentarily. By the way, a few informalities again before we kind of officially get started. Just a little bit of a roll and start, getting everybody acquainted. Come on, at this point, everybody knows how to use Zoom, correct? Some of you guys might be tuned in over YouTube, which is fantastic as well. So we're kind of monitoring on both sides. By the way, feel free, as I say, chat in where you guys might be joining us from today. It's just my own curiosity. I'm always curious, who's joining us from where, what part of the world. And I always say the world because you guys would be amazed. People actually tune in from literally from all over the world. Anyway, yeah, I'm starting up the video over here as well. Make sure that you guys see me all right. Fantastic. Looks like the camera's on. Excellent. By the way, if you see me looking around, I got a monitor here. I got a monitor over here. I got a monitor way over here. One way over there is actually with the chat in it. So yeah, I'm reading it. Okay, nice. A couple of Canadians in here. A few people East Coast. Fantastic. So anybody here first time? Okay. Long time listener, first time tuning in. Not even sure exactly what that means. Here's the informalities that I wanted to get to. And that's this. Number one, you can ask questions today. Number two, this is live. Like everybody always asks, is it live? It's live. Okay, it is live. By the way, we'll refer to the marketplace a number of times today. SPOOs, that's the S&Ps. They're up 75 points. It's about a 2% rally. Big boy rally off the CPI number. Anyway, so you can ask questions. This is live. I may be so inclined to do a couple of trades throughout the course of today's session. Does not necessarily mean that you have to jump into anything and everything that I do. But yeah, we're going to talk in depth about inflection point spreads. It's kind of cool. Everybody's spread around over here. Yeah, you know what? Wow. Okay, 97. All right, I only got out of college in 98. So we probably met like early 2000s. Sorry, I'm just reading some of the chat over here. Again, if there's questions throughout the course of today's presentation, I do want to make sure that I get them answered. We also have Brian Apani and Jeff helping answer questions live inside of the chat room. So if I don't necessarily get to it during the session, we'll pick it up towards the end. Again, I'll either give you a verbal or written answer for sure on any and every question that effectively come in, as long as it pertains to something trade related for the most of the time. All right, with that, again, welcome everybody. Let's formally get this thing kicked off. Let's get the party kicked off. My name is Don Kaufman, and you are watching a TheoTrade presentation. Today, specifically, we're going to talk about inflection point trades. I want to explain exactly what that entails. It's a high probability income generating system. Copyright disclaimer. You know what? One of the reasons I put this up here, I want each and every one of you to know exactly where you can get a hold of me directly after today's event. And it's important that you know that you can get a hold of me at support@theotrade.com. So we use a common inbox, meaning that all the email basically goes to support@TheoTrade. But in the header of the email, if you put Don in the header of the email, it'll go directly to me. So anyway, please feel free to shoot us emails afterwards. It's the lifeblood of what we do. We like to answer trade and trade related questions over there. TheoTrade, although we originally started in Scottsdale, Arizona, we have subsequently moved to the Virgin Islands. I'm actually right now, I guess, is this vacation? I don't know what vacation is anymore. I live in the Virgin Islands, right? So I'm actually back up in the mountains in Arizona right now. So I'm not in Scottsdale, but I am broadcasting live from Payson, Arizona. We've had a place up here for like the last 4 years up in the mountains. Everybody goes, it's Arizona, it's hot. 81 degrees right now. It won't get much warmer today. It's beautiful up here in the mountains this time of the year. All right, with that, risk disclosure. We're not financial advisors nor broker dealer. Listen, I spent 15 years in the brokerage world. Prior to that, I had some market making experience. I'll describe my background in just a few moments. Let's get down to business. This is why you're here. So we're going to talk, okay, in depth about a strategy that survives and then thrives in the midst of volatility. And we're not really going to focus that much today on market direction. And I know some of you actually get disappointed by that. You're like, you're not going to talk about the MACD and the Fibonacci and the Bollinger Band. So we're going to talk about embracing some of the volatility. And let's not be quantifying volatility as necessarily bearish. Like one of the moves we're seeing today, could you quantify today as being volatile? I think so. The S&P 500 moved up 70 points this morning on the CPI report, like that. That's volatility into itself. Number two, you're going to learn to embrace, okay, Federal Reserve interest rate chaos. I call it interest rate chaos. Are they going to pivot? Are they going to do this? Okay. Recognize how bear markets and volatility can actually benefit even some of the most novice traders. All right, number three over here, if you're concerned about risk, cover yourself with a single strategy, okay, which encompasses its own unique risk reduction while generating monthly income. So many of you, and I apologize, I've had a cough the last couple of weeks. I'm getting through being a little sick about 3-4 weeks ago. I'm sure some of you are recovering as well. But generating monthly income is why you're here. We're actually looking for potential monthly income at the exact same time. Risk mitigation is pivotal inside of volatility. You don't have it, you don't survive. I like to say that right up front. Number four, real capital, real trades. Talk is cheap. You're going to see 18 months of inflection point trade results. So listen, everything we do here, and I am adamant about this, everything we do here at TheoTrade, okay, I'm completely no holds barred approach. And what that means is you get to see every trading account. Okay. I mean, listen, for better, for worse, you're going to see everything that I do in a given trading account. We show profits and losses. This is one account. I'll actually even aggregate the accounts. I'm up $173,000 on a year-to-date basis. Everybody's going to ask, well, how much capital is in the account? You can see the net lick for the last couple of days. Listen, there's ups and downs in trading. So I have less than right now 400,000 spread in these two accounts. I'm at $370,000 in these two accounts. And I'm up approximately 170 on a year-to-date basis. So everybody asks, what can you do? What can you make? Okay, I've also got multiple accounts here at Tastyworks. So I trade usually day to day as it fluctuates, just over about $1 million in that's my net lick, which is net liquidating value amongst 4 separate accounts. So that's it's predominantly what I will show you. Again, when I say that this is a no holds barred approach, it's real capital, real trades. I'm not going to sit here and talk about anything that I wouldn't execute in my own account. And I have to show you results. I'm going to show you 18 months inflection point trade results. Number 5 here, small accounts, retirement accounts, good to go. $2,000 or more, you could potentially achieve results. Okay, one of the things that I'm also adamant about specifically today is that that some people are not going to have $1 million inside of their account. That's why I would just wanted to jump right into the subject matter right now. If you have a small account, do not sit there and feel defeated. I can't do this. Okay, $2,000 in a funded brokerage account. You can do anything you want. And I'm actually going to show you that. In fact, today, as I say, I'm going to take a very no holds barred approach. You're going to actually find a monthly income strategy for your portfolio. Just can't live without. Inflection point trades. This is what people have been looking for. And I'm going to describe exactly that. All right. Auto expected move indicator. Listen, this is our gift to you. Stay with me right to the end of the presentation. There's an indicator that I use just incessantly throughout the course of trading and so forth. It's called auto expected move. It's a $500 value. This indicator, okay, was coded, meaning it was scripted, it was built, okay, by our individuals, scripters here at TheoTrade. And we're going to provide you a link specifically to that indicator. Stay with me right until the end of the webcast. If you're kind of curious what it looks like. I hate doing screenshots. So here, bear with me for a second. Let's bring it up. Let's do it live. Anyway, if you go to the XLF and I pull up auto expected moves, what it basically is, and I'm just going to give you the brief, dirty representation of it. It's not an overbought, oversold indicator. What it is these three lines. 1, 2, 3. See them? Okay. That line, that's where the week started. This is the upper edge and lower edge of expected move. Expected move, okay, is derived from option price. So you can say expected move is plus $2 or minus $2. It's the way that the option market depicts risk moving forward. So if the option market has $5 billion that says we're going to move up $2 or down $2, what do? Do you listen to a MACD or a Fibonacci? The mighty 618 knows where we're going. Or do you listen to the option market? Because the option market, what is an options market? It's handicapping forward risk. Most people don't look at options that way. Most people don't look at the fact that when you look at an option marketplace, okay, like a week out, it says, well, we're supposed to move up or down $1.20. Or you look at something like Apple. Let's go look at Apple. You can see I've got plenty of positions in Apple. Well, Apple's supposed to move up or down $3 between now and the end of the week. Okay. Do you like it? You go, well, who came up with that equation? Well, the equation is not important. What's important to know, okay, is that the equation is just like an averaging formula of, all the options that trade in there. There's billions of dollars. Okay. One thing you learn to do in this business is trust. Okay. Billions and billions of dollars. With that, we'll give you the indicator and that link to the indicator right at the end of the webcast. Again, it's our gift to you. Stay tuned towards the end of the webcast. A few housekeeping items. Housekeeping. It's required. Shut the door, turn off Skype chat, whatever else is distracting you. Listen to me. I'm going to go through a lot in today's presentation. Okay. I move at a very fast clip. If you haven't noticed, I tend to go a little bit off the cuff from time to time. So wherever the caffeine takes us, we're going today. So phones in silent mode, kick out the kids, definitely the grandkids. The dog can stay. All I'm saying is you took the time to be here. I'm serious. Focus on being here because I'm going to run through a lot. Here's a little bit about my background. So in large part, what brought me not only here, but the partners of TheoTrade and development of TheoTrade and a lot of the individuals that are instructors here at TheoTrade, we come from a background of order flow. Some of us were market makers. Some of us actually come from the brokerage business. Some of us were market makers that came from the brokerage business. But in large part, why I'm here, I watched order flow for 15 years. And a lot of people just don't have any idea, like, what is order flow? Here's the bottom line, okay? I got to see everything you have done. Who is you? Retail. What's retail? If you had an account at thinkorswim or TD Ameritrade, anytime, okay, from roughly 2001 to 2015, we've studied you, okay? We studied everything that people did in terms of trading, okay? And this is like, a lot of people never hear this kind of stuff because nobody in the brokerage business goes like, hey, by the way, we're looking into your accounts to see what is it that you do, okay? And then more appropriately, we want to know what you do and do well. So if you look at a subset of accounts, for instance, 100,000 accounts, when I was at TD Ameritrade, we had approximately 7 million accounts. And when we had that 7 million accounts, we'd look at subsections and say, this 100,000 people traded options. Okay, what were the most successful strategies? What did they actually do in the strategy? We'd exploit the angles, look at everything, and then we'd build education modules. Unfortunately, though, inside of the brokerage business, you're limited as to what you can do and say because of FINRA and the SEC. So what did a lot of us do? Packed up our bags. I had a 5-year non-compete with TD. I had to work for TD for 5 years after they bought us. So for the most part, after 5 years, okay, we left, took off just shy of a year, which I had to do, and came back and we built TheoTrade. So it's a little bit about how I got here. Again, people always ask me how I got involved in the business. I grew up around traders. I had family that were market makers. I was invited into the business 3 weeks out of college. A few years after that, I actually started working for a no-name firm called Thinkorswim. I was in the executive team when we took Thinkorswim public. I was on the executive team when TD Ameritrade bought us. Okay, again, I exited after a 5-year deal that I signed with TD Ameritrade. And again, what you're going to learn here at TheoTrade comes specifically from watching billions and others' mistakes and the knowledge of what works best for retail traders for a long period of time. Again, if you ever need to get a hold of me, support at TheoTrade.com. I still do a couple of media appearances. I actually just did TD Ameritrade TV. This one's from back in 2019. I do TD Ameritrade TV every Wednesday morning. I do take some shots at anybody I can get. Like, I don't do CNBC very often because it's not exciting unless they call up and say like Kevin O'Leary is going to be on the other side of it. So it's I'm very selective. I'm very selective. I actually did CoinDesk yesterday too. I had to like bite my tongue because CoinDesk had earnings and you knew earnings were going to be bad. So it was be remiss to say that that one went well. Anyway, that's me pitted against Kevin O'Leary. It's one of the more favorable, and memorable portions of CNBC over the years. Let's get down to business. Volatility has arrived. It's not going to abate anytime soon. One of the first things I want to describe to you about markets right now, okay? CPI print comes out today, okay? It's still red hot. Like people are like, inflation may have peaked. It was at 9.1%. Oh, it dropped to 8.5%. But still, my heart is running red hot. The target for the Fed is 2%. We're at 8.5%. You're not even in the same ballpark. You ain't even playing the same game. You're not even in the same state. The Fed pushing rates higher, contracting the balance sheet is going to continue, okay, to cause chaos in markets. Just the bottom line, like volatility, and I'm not talking about being bullish or bearish in this case. Just the bottom line is we may rally up, we may get wicked to the upside. You're going to see some tumultuous trade. We're going to go through what I call the merry-go-round of risks. It's kind of like this house of horrors that just keeps coming back. You're like inflation, and then it's not inflation, and geopolitical risk, and then it's not geopolitical risk, and then strong dollar. Today, the dollar is incredibly weak, which the market loves, but the strong dollar is going to come back. And then we're going to talk about the Fed. Oh, the Fed is actually coming, but there's kind of a big hiatus of another 6 weeks before the Fed announcement comes. It's just going to keep going in a merry-go-round of risks, which you have to understand. Overall, that volatility is not going to abate. So for me, it's game on. Okay. This is not about like, hey, anything other than you need to learn to embrace a little bit of the chaos. Everything from, I mean, you can go on all day over here, from interest rates to political instability, to geopolitical instability, to oil prices. You could probably name 500 reasons that you should embrace the chaos. Okay, the problem is that most people don't know how that translates. You can see what's coming. Like, again, if I ask the general, individual in this chat, and please chat in over here, okay? When we start getting into this, they say, what do you see in the future? And they go, well, this could happen and that can happen, but yeah, inflation's entrenched, and, the Fed may pivot back, but that's going to be a while. And, we haven't even stopped like buying back stock yet. That most companies like Apple haven't even stopped buying back stock, and people are wondering, are we at a bottom? It's premature to say whether we're at a bottom, whether we're at a top. But when stocks haven't even stopped buying back their own stock, okay, you're buying your own, but markets, listen, they got real in 2022. That's just the bottom line. 2021, you could have been, an 18-year-old sitting in mom's basement screaming, meatloaf, and bought a stock and made money because you were on a Reddit board. Okay, 2022, reality strikes. Stock picking and Reddit boards are not going to cut it. The irony of that is this Monday, there was a big fever pitch again in GameStop, and big fever pitch in AMC. All of a sudden, they got ripped apart on Tuesday. Here we are Wednesday. They're like feeling the Wheaties again. Listen, you're going to need a strategy that's going to embrace the volatility. It's going to embrace the chaos. It's not going to be much about directional bias. If you rely right now on what you think markets are going to do, meaning they're going to go up, they're going to go down, okay, you're already dead. You're dead. You have to understand everything that we do right now is very binary. Binary means we're going to explode higher, we're going to explode lower. We're going to do it on news. The S&P's moved 70 points today in 1 minute. Why? CPI report. Okay. Last week, we had the non-farm payrolls employment situation. What did the S&Ps do? The number was spectacular. We rallied and then we dove. Okay. You got to also reduce risk while sustaining monthly returns. And you got to substantiate those monthly returns, okay, while reducing the risk. It's critical. Okay. Let's get into it. We're going to talk a little bit about inflection point trades. Some of you may or may not be familiar with inflection point trades. Higher volatility resulted in significantly more options premium. Okay. Now, I've said the O word, options, twice right now. Okay. We are going to talk a little bit about options, and I'm going to make the argument in here. Okay. I'm going to make the argument really quick. Even if you're not inclined to want to trade options, seriously, stay tuned into this presentation. And I say that simply because there's some people that immediately hear about options and they're like, I don't have time for that crap, or I'm too old to learn anything new. Okay, whatever the reason may be, you have to understand that options are the cart leading the horse right now, that the options marketplace is actually dictating, okay, movement in the market. That's what, if you guys have never heard the terminology yet, gamma squeeze, like a squeeze, like a short squeeze to the upside. What is causing the short squeeze is the options market. That is what a gamma squeeze is. Gamma squeeze ultimately means clients are going out there, they're buying calls, they're buying calls. So how does buying calls drive a market up? You ever think to yourself that? Hear the term gamma squeeze all the time. Let's get to it. All right. Because people still think like directional bias is going to work. And you got to understand, options are what is moving the market. You buy calls. The market maker sells calls. The market maker sells calls and buys stock because the market makers are doing everything to offset, okay, any directional risk. They're literally countering all directional risk in real time. By you buying calls, you're forcing the market maker to buy stock. Buying stock actually drives the stock higher. As the stock drives higher, those that are short the stock have to cover the stock. Covering the stock is buying stock. What do? You start spiraling to the upside. Do you know the exact same thing is true to the downside? In fact, the downside moves are, not equally as oppressive, but 4 times more the volatility occurs to the downside. So inflection point trades are designed to sell options premium while reducing risk. It's one trade, one hedge, one end goal. Listen, inflection point spreads. It's one trade, one hedge, one end goal. The end goal, make money. The bottom line, that's what you're here for, is to learn to make money. To do that, you're going to have to learn to sell options. Selling options in a higher implied volatility environment is wonderful. So when you talk about higher implied volatility, let's quantify that with a statement really quick. If you look at VIX right now, you're like, the VIX is really low. But consequently, look at the VIX over the last 15 years. It doesn't matter what you think, okay? Look at the data. Over the last 15 years, the only time we've seen volatility this high for this considerable period of time, you got to pretty much go back to like financial crisis. I mean, the financial crisis, we almost re-entered into the financial crisis in 2011. But the point that I'm trying to make is volatility is a rocking. Even though it's down big boy today, volatility is still rocking. And you got to have a lot of respect for it because volatility just makes it impossible to discern direction, right? So you're going to learn to sell options. And a lot of people have heard through the grapevine that selling options is a way to make money. Who's heard that? Anybody? Okay. Because I really want to talk a lot about that. By the way, yeah, we're going to definitely talk about big down days in the market. Big down days are actually good, right? But if you've experimented with selling options, and some people have experimented with selling options, they find out really quick. You're like, oh, there's a lot of risk in here. Like people learn to do strategies like iron condors, and there's all these crazy names. Listen, today we're going to separate fact from fiction, right? Real risk from all the garbage that's out there. We are going to get into an in-depth session about selling options premium. And if you are brand new to this, I'm telling you, do not panic. If you know nothing about options, you're okay for today's session. I'm going to kind of ramp people up a little slowly. Again, newsflash, you can do this with as little as $2,000 in your account. $5,000 though would actually qualify for the retirement account, meaning that you can sell options premium without any restrictions, even in a retirement account, okay? With as little as $5,000 in the retirement account, $2,000 in a regular margin account, $5,000 in a retirement account. All right, for those of you that are brand new, do we have any option novices out there? Any option novices, okay? Who's an option novice? Come on, people. Admitting it's the first step. I'm just watching the chat room over here. Nobody ever wants to say, me, I don't know what I'm doing. Listen, for starters, okay, grasp big concepts. So I'm going to go through a lot, but if you're brand new to this, I just want you to latch on to big logic, like probability. We're going to do some high probability trades. But for those of you that are a little bit more experienced, if you've got experience, cool. If you got experience, sit back, relax, because I'm going to get to little nuances, and that's what you want to pick up. Especially those of you that are experienced, you're going to enjoy what I'm trading, how I'm trading it, how I'm circumnavigating some of the margin restrictions. Yes, let's dive right in. There's a lot of facets of selling premium. People hear this terminology of selling premium. Selling premium means selling options, but you can call it all kinds of stuff. There's so many names for selling premium. Selling premium could be called selling premium. Selling premium we call credit spreads. Selling premium could be called short call spreads or short put spreads. Selling premium could be bear call spreads or bull put spreads. Selling premium could be construed as delta neutral trading. Selling premium can be construed as selling naked. Okay, I'm naked, I'm out there, and I'm loving every minute of it. Like there's like 50 different terms you can use for selling premium. Okay, today I'm going to sell premium, but I'm going to use an inflection point trade. And I'll show you exactly how the inflection point trade works, why it works. You can use selling premium to be both bullish or bearish. But generally speaking, in today, we're going to be very much more market neutral. I want people to know right off the bat, okay, let the market chaos grip hold of it, okay, embrace it. I can't stress that. If there's like one phrase, embrace the chaos. All right. It doesn't matter whether we go up, whether we go down. Okay. Overall movement does make a difference. Like if we go up another 700 points, you're like, oh, wow, that's kind of crazy. But, you're going to be like looking at markets very differently after this. Anyway, how our members are doing year to date. Periodically, we'll hop into TheoTrade and ask people in general terms how they're doing. Big text, thanks to the training, up 23%. Mark, this is June 16th. I asked the question, up 190%. Carla up 30%. Tim is actually down, but he joined TheoTrade a little late in the year. I actually like to show that he's down $1,000 since he joined TheoTrade, but would have been down a lot more if he didn't join. Again, up almost 50%, best year to date, goes on and on and on. I mean, I wanted to show like how our members are doing on a year-to-date basis. Onward and upward from there. Probability and profitability. Your trading is always going to be based on probability. So the one thing I want to like, I guess, get across right off the bat is people always email me every single day. I get 5 to 7 emails every day. And they say, what's your track record? How often are you right? And I'm like, it's the worst question to ever ask somebody that actually knows this business. Okay. Here's one thing. Within 30 seconds, okay, we can teach you to be right 90% of the time. But being right 90% of the time, okay, does not designate that you're going to make money. Being right 90% of the time has nothing to do with your directional bias. It doesn't have to do with a MACD, a Fibonacci, or Bollinger Band. I can just go out and I can trade the correct option to make myself correct 90% of the time. Being right, though, okay, and making money are two different sides of the business. You do have to realize something, okay? Look at all the financial media. And I don't mean to eat a lot of time on this, but I think it's so important. Look at the financial media. I just did a spot today, again, on TD Ameritrade TV. What do they ask me every single time? What do you think the market's going to do? I said, well, I think the market's going to be incredibly volatile, okay, with a little bit of a down bias because we've rallied so much, yada, yada, yada. But that's not how I trade, okay? I don't sit there and go, well, I think Apple's going to do this, because that's not how we trade. The inflection point trading system circumnavigates that. Probability alone doesn't make you profitable. Remember that. Now, let's get ready to rumble, or sell premium for that matter. Selling options premium is more than finding high probability trade opportunities. Anyone can find high probability trades in a matter of seconds. You want to see? Okay, let's go find us a high probability trade. So we go on to thinkorswim and we open up, what product do you want to, let's open up the spiders, okay, and go, okay, here's a chart. We don't need no stinking chart. Watch this. I'll go out here 100 days. I'm just going to get, 72 days. It's fine. Let's get crazy. Let's open up every option. And let's open up a column over here called probability OTM. That's probability out of the money. You ready? Okay. You want a 90% probability of making money. Do you? Do you? There it is. Right there. You could trade this and you have a 90% chance of making, pretty much $1.77. You go, oh, how does that grab you? Yeah, I'm out in November, but whatever. The point that I wanted to make over there, it takes seconds to do that. You go, are those probability calculations right? Probability is based on option price. So billions of dollars traded in that marketplace. The point that I'm trying to make is anyone can find high probability trades. But when inflection points, trading is, and when inflection point spreads are, it's a system. You got to find, trade, and hedge in one transaction. Find, trade, and hedge in one transaction. You guys ready to learn it? because here we go. Discovering probability and premium selling tactics. So over the last, okay, excuse me, over the last approximately 18 months here at TheoTrade, we have done nothing, okay, but sell premium very, very effectively. I will show you 18 months, okay, of trades. Before I do so, when I first explain about option premium selling, I'm going to explain it the same way I would with any option premium selling strategy. Okay, if you've been and tuned in before, you're going to be like, oh, I've seen this example before. Trust me, the initial example is just that. It's just the initial example. We're going to go like Alice tumbling down the rabbit hole today. So this presentation is very different than any presentation that I have done over the last 18 months. Today, I've decided to kind of show you a little bit more, like, again, I'll say this as eloquently as possible. I'm going to kind of give you the full Monty, okay, of what is not only working over the last 18 months, but I'm going to tune you in more than we have previously to exactly, okay, strategically what is working, why it is working, and more importantly, how you can actually replicate, duplicate, and execute into any trade that I'm discussing today with as little as $2,000 in the account. So on that note, hang with me for those of you that have tuned into this presentation before, because you're going to be like, it's the same crap. Okay. It is not the same crap. Okay. It is much different crap. It is much more specific today. So here we have a stock and the stock is trading at 100. I have, okay, no qualms about saying this. I don't want to buy no stinking stock. Stock. Why do I not want to buy stock? Because stock has a lot of risk, which the last like couple of hours of trade. You know, in the last couple of hours, if this was like NVIDIA, if it's NVIDIA, we sold off here. By the way, the best part about NVIDIA, talk about buy the rumor, sell the news. Okay, NVIDIA is a chip stock, right? And they have like this big chip bill coming out. Okay, the administration signs the chip bill and the stock sells off huge, but it's okay because then the CPI print comes out and the stock rallies huge. And you're like, I don't know what I want to do. Do you think how much risk that is? It's crazy right now. Forget it. We're not going to trade the stock. We're going to go out though and we're just going to trade the options. For those of you that are brand new to options, I'm actually going to show you two different sides of this. I'm going to show you buy side and then sell side, right? So to understand selling options, you got to understand buying options. By the way, palms out to you, that's selling. Palms facing me, that's buying. Okay, if you ever stood down on a trading floor, you're like, that's chaos, man. It's really not. Okay, you got one monkey on one side of the pit going like this, another monkey on the other side of the pit going like this. Okay, and then you got people in the middle of the pit that are the brokers that are just screaming trades out. It made perfect sense to me at the time. The only thing that never made sense to me is trading in fractions. When I first started trading in '98, everything was still in fractions. I'm like, oh, you realize that, you know, not that young anymore, but my generation without spell check and a calculator, worthless. Okay, I grew up thinking that a TI 82 calculator was my brother. Anyway, let's get into it. So I'm going to go out and I'm actually initially going to talk about buying options. Okay, we're going to buy a 120 call. This is an example I use all the time. You're going to buy a 120 call. What does a 120 call give you the right to do? Just time out for a second. Stock's trading at 100. You know the stock's trading at 100. I'm going to buy a 120 call. A 120 call is out in the nosebleed seats. If you're buying a 120 call, it implies that you think that stock is going where? Up and up huge. I mean, you don't need the stock at 100. You need the stock 20% higher just to be able to do what? You're not even breaking even at that point. You're buying a 120 call. For those of you that have no idea, have never traded an option before in your life, what does a 120 call give you the right to do? Well, options have rights and options have obligations, okay? The obligation here, there isn't one. The right, okay? Why do I have rights? Because I'm a buyer. Buyers have rights, sellers have obligations. If I buy a 120 call, it gives me the right to buy the stock at 120. How long is the call good for? Let's say 3 months. Let's get crazy. You got 3 months. You're on the clock. You went out and bought it right now. You paid $1. You know what I call this trade? A wing and a prayer. Because you bought a 120 call, you paid $1 for it. You're like, you only paid $1 for it. It's pretty good probability that that dollar is going to where? 0. You've done that trade before. So if you buy a 120 call, you need that stock to go all the way up here. You want to get that thing to 130. Like that's a 30% move to make it really worthwhile. But if you think about it, if the stock does go to 130, you have the right to buy the stock at 120. Everybody else in the street has to pay 130 for it. Your call is going to be worth at least $10, minus, of course, the dollar you paid for it. So you're going to make $9, right? Okay. You go, but who am I going to sell the 120 call? There'll always be somebody on the other side of the trade. That's what the market makers are there to make a fair and two-sided market. As a market maker, I'm both a buyer and a seller at the exact same time. So a 120 call gives you the right to buy the stock at 120. But you have to realize from a probability point of view, what can you say about this trade? Let's just back it out. What can you say about this trade? You pay $1 for it. What's the probability of the stock moving up? $20, okay, in the next couple of months. That's not just a directional bet. It's a massive directional bet. Like this ain't 2021. It's a very low probability. Great. So instead of buying it, we're going to turn around right now and we're going to sell a 120 call. And we're going to sell it and we're going to collect exactly a $1 credit. And stop right there. This trade's going to be for 3, okay? It's going to be for 3 months. Let's put it down here. We're going to sell a 120 call. And for selling the 120 call, because we're taking risk, I'm going to collect exactly a $1 credit, okay? Now, immediately when people look at this, they go, excuse me, sir. That's a ridiculous amount of margin. Put aside margin for a second, okay? Part of today's presentation is going to circumnavigate margin restrictions. Circumnavigate, what does it mean? It means regulatory arbitrage. I did spend 15 years in the brokerage world. If you ever have a question about margin or day trading margin, okay, they're ridiculous questions. You can circumnavigate day trading margin restrictions. You can circumnavigate regular margin restrictions. You just have to know what to do. I will show you that today. Is that good? Okay, again, I want to make your day here like worthwhile. If you're going to spend the next, you're going to spend 90 minutes or 2 hours, let's make it a worthwhile time together. So I want you to know how to circumnavigate different restrictions. I love being outside of the brokerage world. I really do. I spent, again, 15 years, as a registered rep, and I had every license. I had Series 3, Series 4, my Series 7, my Series 24. When I left TD Ameritrade, I had 768 people under my Series 24. It's a lot of people. It's a lot of compliance. I also had a Series 66, which is my 63 and 65 combined. You want fries with that? I was a registered investment advisor. We had about $400 million under management, which takes me to the sale of the 120 call. So I sell a 120 call. Now, a lot of people that are new to this, they go, how can you sell something you never owned? Options are cool like that. Options, you could be a buyer or a seller to open the position. If I sell a 120 call, I'm selling myself into an obligation. Okay, it's like marriage. I'm selling myself into an obligation. I'm selling myself, okay, into having to give somebody my stock at 120. You go, do you own stock? I do not own stock. You go, how can you sell something? You're naked. You're bad man. You're talking about selling naked. It's an example. I just need you to understand high probability before we go any further. The crux of today's session is understanding that this is an incredibly high probability trade, that the marketplace has to rally 20% just for you to start to take some heat, okay? We'll get to how to reduce risk. We'll get to the margin. We'll get to all the nuts and bolts behind this, but you have to understand first, okay, where I'm headed. And where I'm headed with this, if I sell a 120 call, there's an incredibly high probability that that call, okay, is going to burn nothing, but you're only collecting $1. You go, so what can happen? So you sell a 120 call and you sell it naked. You don't own any stock. Here's what can happen. The stock can stay flat. If the stock stays flat, you keep $1. If the stock goes anywhere down, you keep $1. If the stock goes up, let's get crazy, let's go to 110. Yeah, you keep $1. Even if the stock goes to 120, if the stock goes to 120, what do? You go, I wet myself? Yes, you do, but you still keep $1. But if the stock starts getting above 120, that's the little bit of a fever pitch. And I know what you're thinking right now. You're thinking to yourself, you're a madman. You're going to wait 3 months to make $1? Like I didn't sign up for a webinar to make $1 in 3 months, okay? No, you didn't. But you do have to understand conceptually where I'm headed with this. That's an incredibly high probability trade. If we get that and that alone, you're selling a way out of money thing. You're selling the nosebleed seats. You're selling the nosebleed seats, and you might not even be able to see the game, but that's okay because you're still going to be able to collect some money. The name of the game right now is to avoid, okay, is to avoid the beast. What's the beast? Okay, right now the beast is stock. The beast is the market. Market's angry. Okay, what do you think volatility means? All right, volatility is like a Wall Street word for like, you know, hostility. Should we just call it, this is a hostile market? Forget the term volatility. Like everything on Wall Street is like watered down. They go, you're not in a regular mutual fund. You're in a 2040 fund. You go, what is a 2040 fund? Is that when I have one foot in the grave or both feet in the grave, right? They changed the marketing on Wall Street after 2008. They're like, yeah, man, get into a 2040 fund. You'll be just fine. Okay, because they don't want you to exit the fund until 2040 so they can make their 1 to 1.5% every single year. In this case, you want nothing to do with the underlying. You want to stay in the outskirts. Okay, you want to be in the nosebleed section. And this is exactly why. Now, let's take what we've learned here for just a moment. Let's take what we've learned here and make it applicable to real market conditions. Are we okay so far? Okay to go? You let me know. You let me know if you're okay to go. Sorry, I'm keeping the cough to a minimum. So if you're okay to go, all right, I'm actually going to jump forward to a live trading application because it's, you know, it's one thing. I say this a lot, but like talk is cheap lately, especially like people like, I got a system, man. I got a system that's going to beat this market. Really? You're going to beat CPI because your system knows where CPI is going. Okay. Somebody's always got a system. It reminds me of like, so I lived in Scottsdale for a lot of years and I'd fly up to Vegas. I would meet a lot of the traders and stuff I worked with up in Vegas, meet some people from like TD Ameritrade, always business in Vegas. Anyway, I'd fly up to Vegas and I'd hop on like it's like a 45-minute Southwest Airlines flight. And every time I'd hop on the Southwest Airlines flight without fail, I was always sitting next to somebody. They're like, I got a system. And I'm like, really? Because they build billion-dollar casinos in the middle of the freaking desert because you, sir, sitting on a Southwest Airlines flight next to me, you've got a system. And it blows my mind, okay? Just to give you an idea about systems in the marketplace. Here's the system, okay? I ran a product committee for thinkorswim. You know what thinkorswim is? This is the single most successful trading application in the history, okay, of online trading, bar none. Times 10. There's more clients on thinkorswim than any other trading application, times 10. I ran the product committee for thinkorswim for 8 years. All we did is put stuff in here that, you know, would be better. If there was anything out there that truly made you more accurate than another trader, we would have spent $1 billion on it. We had the capital. We were a public company, okay? We could have done anything. The time I was at TD Ameritrade, we were like, you know, a $25 billion company. If our clients could be slightly more successful than somebody else's clients, that's what thinkorswim, okay, relied on. And I put a lot of weight into that because people are looking for the perfect system. Let me tell you what the perfect system is. It's understanding what your risk is, understanding that high probability trades can be extraordinarily effective, okay? But this is not about directional bias, okay? This is not about what you think. It's not about what you know, because right now, you don't think anything and you don't know anything because, you know, this is pretty much in the Fed's hands now, that and inflation. I'm actually going to go all the way out 100 days because I want to make a point. We are in a live market here. And again, I'm going to actually highlight a few things. I'm going to build my first trade today in SPY, okay? What is the spider? It's probably the most marquee product ever. And the spiders are trading just shy of 420, right? I'm going to go all the way out 100 days out. Now, bear with me as I take you through this. I'm going to go out and just like my previous example, okay, I was talking about this a moment ago. I'm going to sell the call, okay? I'm going to sell a call. Look at this. This call, if I sell it, has a 93% probability of making money. You ready? So let me write it up here. I'm going to sell, okay, the 18th of November, 475 call, and I'm going to sell it for $1.30. By the way, I would fill right now $1.29, $1.30 between the markets, no problem. $1.29, $1.30 for sure. I could fill it there, right? Well, now we're $1.30. After I sell it, what am I going to do? Absolutely nothing. I'm going to sit on my hands. Okay, don't worry about hedging. Don't worry about margin. Do not worry about margin, because somebody inevitably here, they're trading with a $2,000 account and they go, I can't do this. You can do this. I'm actually going to show you exactly how to do it. Now, let's say all factors held equal. People think like, why would you go out so far in time? Listen to me. That's why you're tuned into this webcast. I'm going far out in time because there's actually incredible amounts of decay this far out in time. Okay. What I'm going to show you right now is going to blow your mind. I'm going to go out 100 days and sell the November 475 call. Okay. Wait exactly 28 days. We're just going to jump forward to the October options. Why am I looking at October options? I want you to understand that there are phenomenal rates of decay, okay, way out in time. I'm going to come all the way out to October, and I'm going to assume you're going to hold your position, okay? All other factors being held equal, you're going to hold your position for exactly 28 days. And after 28 days, you're going to buy back the 18th of November 475 call, okay? And what are you going to pay for it? Price is right here. You're going to pay approximately, let's even bump it up a penny. You're going to pay 45 cents to get it back. It's the same call. You go, how is that possible? Because what people do not understand about this marketplace is that there's actually huge shift in skew, huge shift in volatility, that longer term options actually have great amounts of decay. You realize that people get into all these like Reddit sites and they get on like Facebook and they have all these groups. They're like, you should sell short dated options. No, you should actually sell longer dated options, because we just showed you that 28 days passed, okay? And the amount of decay, you do realize you can make between 60, okay, to almost 70% in what? In 28 days. Who needs, like, people are like, I don't want to sell something with 100 days. Just because I'm selling something for 100 days doesn't mean I'm going to hold it for 100 days. I'm selling something for 100 days and I'm going to get out of it in less than a month. I'm going to get out of it in less than a month. I'm going to make between 60 and 70%. In some cases, I'm usually shooting for about 50%, but right now it's good. It's good. This rally has actually caused that decay rate to actually increase dramatically. It has to do with how implied volatility is shifting right now. Okay, it's what we call skew. The skew in what we term kurtosis is beautiful at present time, and you're actually able to collect a ridiculous amount. Does this make sense to you? Because I want you to understand, I'm not here to tell you to hold some crap for like 100 days, and I'm not here to tell you, you only made $1, man, or you only made 90 cents, man. Yeah, but how many times can I do that? How many times do you think I can do that? I can just put it on, put it on, put it on, put it on, put a couple of them on, right? And you go, well, you can only do that in the spiders? No, I could do it in a ton of different products. I'll go over to the QQQ right now, just to make a quick point. Could I do this in the Qs? Yeah, let's do it. Let's go 100 days out in the Qs. Okay, go 100 days out in the Qs. Dun, dun, dun. I'm going to key into an option. Look at this one. It's trading for $1. So this one's trading for $1. It's the 390 calls. I'm just going to scratch it up over here. Okay, so here we have the 390 calls, and they're trading for exactly $1. So we go out and we sell them. 390 calls, sold them for $1. $1, $1, $1, $1. Okay. Then precisely 28 days later, we're going to look at those 390s, 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 390s. He's scrolling. Where are the 390s? There they are. Oh, look, they're trading for what? I sold them for $1. Then they're trading for basically 37 to 38 cents. You can make 60%. As I said, you're going to make between 60 and 70%. And you can do this all day long. You just need to know how to, you have to know how to do it. The other thing is, I'm not going to go out there and teach you just to sell naked. So just calm your little engines down right now. We okay? Okay. Because it's, you know, you have to understand that trading, trading and successful trading, it doesn't have to be, it doesn't have to be lovely. Okay. Doesn't even have to be clean. What it does have to be is deadly accurate when it comes to criteria. You have to know what options to buy, what options to sell. You have to know how to reduce risk. Okay. Once you have a construct, though, what I term criteria is a recipe. Once you have a construct, you know right now part of the construct is I'm selling options that are further out in time with the intention of buying them back with less than 30 days, like after less than 30 days, not with 30 days left. I'm only holding this position for like 30 days because it's playing hot potato and just trying to work through, okay? And I can do this in umpteen different products, okay, with very, very little amount of margin. And that's exactly what I'm actually going to bring to your attention, okay? So where does this inflection point trading system come into play? That's what we're going to talk about. Before I get there, I want you to understand selling options equals decay. When you sell options every day that passes, you see the dwindling options premium. People have like, I'm melting. As time passes, the options decay exponentially. Let's take a moment to review decay. Everybody has seen a decay graph. Like everybody has seen this, but this, okay, isn't the decay graph that we're trading. So one thing I want to stress to you is everybody that's seen the decay graph, how many people have seen this? Okay, everybody's like, I have. Yeah, that doesn't matter for us because you know what this is? This is what we term near money, okay? That's near money. What's near money? What I'm trying to point out over here is this is for an option that is near, okay, the stock price. It's near the stock price. This is not the decay graph that we're actually trading on. We're trading on a decay graph, okay, that is more about a burn of volatility and more of a burn about skew than it is just time. Because people look at this and it blows their mind. Totally and completely blows their mind. Like, I had no idea you could sell options premium. I'm telling you right now, okay? By the way, somebody was saying, is this the same program as Ultima? No, okay, where you're using different hedges, and we're going to get to that here, okay? It is different than what we have actually shown in any of the past sessions, okay? Here's the key point. The key point is the options that we are selling, okay, for the last 18 months haven't changed. The options that we're selling have not changed. And people go, why? Why sell so far out in time? You may have noticed I've sold a few months out in time. Typically, traders sell shorter dated options, but that's exactly why you're tuning into this, webcast. That's exactly what is such critical importance, okay? And the way that I want you to think about this is, we see a couple of examples in here, and you think to yourself, I think I can do that. People, right now, you're only seeing a very minute portion of the picture. Now, I want to take you to the other side of this before I go on, okay? I'm actually backing up a little bit, okay? So you saw I can go out and sell, for instance, a 120 call, and I can collect $1. What about down here? Okay, what about the puts? All right, puts are kind of confusing to people. So I'm going to go out in this example, and I'm going to sell, and I'm going to go even further out of the money. Okay, I'm going to sell a 70 put. Stock's trading at 100. I'm selling a 70 put. Guess what? For that, I'm going to collect $2. That too, okay, is going to be for 3 months of time. Okay, selling a 70 put, and you go, what if the market crashes? Now we're talking. If the market crashes, you're in big trouble. See, the one thing I want you to rationalize is you go out and sell these options, okay? Eventually, the market's going to rally huge or sell off huge. Yes? Okay? It works swimmingly until it doesn't. Are we okay understanding puts? Because before I go any further, okay, I want you to understand that this absolutely unequivocally can be done on both sides of trade. If you take a look at something like the spiders, why can't I go out and sell puts? By the way, you want to see what the puts are trading for? Look how far out. We are trading at the 420 level. Let me write that up over here because I want you to see it. The SPY, and I love to use a live trading application. The SPY is trading at roughly 420, okay? The puts that I'm selling, okay, are all the way out here. Look at this. I can sell, all right? I can sell 330 puts, and I'm still collecting $2. $2. Consequently, I can also sell the what? What did I sell earlier? The 475 calls. What did I collect there? Basically $1. You realize how much decay you can actually pull off of this in the next 28 days. If we can get you to that point, you can realize like, holy crap, he makes, pretty valid point. There's a phenomenal amount of decay out here. I never thought to look out there. Now we're actually getting somewhere. After that, now we have to take you into what happens when you're wrong. Come on, let's get it out. Okay, we're going to worry about margin in a moment, but what happens in this position when you're wrong? Because what you need to understand is there's a 90% probability trade, but then there's the 10% hammer. Okay, the market is evil. It's evil market. So you're going to go out and you're going to create this strategy. Like, and again, I'm going to script this here. You're going to go out and you're going to create this strategy. Let's just zero everything out. Let's draw it up over here on thinkorswim for a second. Okay, forget about the fact that I'm on a trading application. Just blanken the screen. Let's draw you a little bit of a distribution curve. You're going to sell some junk way out here, and you're going to sell some junk way down here. Like, okay, you're a seller of both of those. And eventually the market's going to go, I'm going up, I'm going up, I'm going up, and it's going to go down, and you're going to be toast. Okay, and everybody realizes that sooner or later that's going to happen. And that's what I call the 90% probability, 10% hammer. You go, what's the 10% hammer? If you don't know, you will find out. See, people have done this movie before. How many people here have ever traded in an iron condor? Come on! Admitting it is the first step. Anybody? Iron condor. You can say me, 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 me. Me works, okay? Has anybody here ever traded in an iron condor? So I'm going to give you the plight of the iron condor traders. Quite a number of people. I like this. By the way, I love doing sessions when the market's open. I'm not doing these anymore on like a weekend. I'm not doing it anymore when the market's closed. Gotta do it when the market's open. It's dynamic. It's interesting. So I'm going to tell you, exactly what happens to you in an iron condor. Is you make money, make money, make money, destroyed. You're like, I didn't even see the train that hit me. Did anybody get the license plate on that train? I'm like, trains don't have license plates, man. It's okay. Basically, what happens to people in iron condors, here, I can actually script this for you too. I like drawing on the screen, okay? I want to be the John Madden of trading. For those of you who don't know John Madden, okay? Draw the teleprompter. You have to love that. The iron condor looks like this, okay? You sell a call, and then you buy a call, and then you sell a put, and then you buy a put. You go, oh, yeah, in about 2 seconds, I just showed you an iron condor. And then you go, what do you do after that? You go, prayer. What is the prayer? The prayer is that you end up inside of here. The first time you do this trade, you do it in the SPY, and you go, Captain One Lot. I am Captain One Lot. Captain One Lot. You go out and you sell this thing in the spiders. Hot damn, it worked. So the very first time you went out and did an iron condor, it worked. Why did it work? Nobody ever questioned the fact that you sold an iron condor that has a 90% probability. Of course it's going to work. The second time you go out and do it in the spiders, you're no more Captain One Lot. Now you're doing it in the SPY, okay? And you're Captain 5 Lot. You're like, you start grunting a little bit. Guess what? Your second month in the spiders, it works. By the third month, you go, I'm going to do what the instructor did. Now, you took a class, probably cost you $500 to learn this. Then you step over to the product called the SPX. You know what the SPX is? It's the beast. It's the widow maker. So you go to the SPX, do one contract in the SPX. Boom, you hit it again. By the way, one contract in the SPX is the same thing as 10 contracts in the spiders. On month number four, by the way, the iron condor is good. When I say it's good at drawing you in. It's not a good trade. It's good at drawing you in. It's like, come on, come on, come on, right? And then on the fourth time, you go into the SPX, do 10 contracts. By the way, 10 contracts in the SPX is the same as 100 contracts in the spiders. And on the fourth month, you put it on, and guess what? Bam! The market's like, I got one! And you get completely wiped out. And you get completely wiped out, not only in the previous 3 trades that you make, but it actually wipes out half of your account. And people look at this and they go, and then you think about train law, your losses exceeded the gains in the previous 3 trades. It literally wipes out a minimum 50% of your account. And people, like, after I explain this to them, they go, holy crap, it's like you can see my account. I could see your account for 15 years. I've seen everything there is to know about an iron condor. Like, nothing that you're ever going to bring to me is going to shock me at this point, okay? I mean, again, I sat at thinkorswim in the Chicago offices during the entire financial crisis. Like, I haven't dealt with bad iron condors gone bad, okay? I sat there during every major event, pretty much from 2001 to 2015. There was a lot of crap that happened in that time frame. But then people, they don't ever think the strategy's wrong. They go, oh, I'm going to go to the iron condor. And then they go, I can fix it. I know I can fix it. Fix is a dirty word. You don't want to try to fix trades. People try to take an iron condor and they're like, I'll put a butterfly in this leg and I'll roll this leg out. Just get a shovel and keep on digging. Some fixes may work. Do you understand, though, that a fix, the very notion of fixing, takes more good money and throws it into a bad position? Most people don't view it that way. But fixing, you got to throw it out like yesterday's, trash. Fixing a trade is like taking a really nice car, driving it off a cliff, and then bringing it to a body shop. Nice car, drive it off a cliff, bring it to a body shop. What are they going to tell you? They're like, it's totaled. It's a piece of crap. It's an amalgamation. There's nothing I can do with it. You turn around and go, fix it. Make it just like it's new. They go, but sir, but ma'am, you can literally buy a new car for less than this amalgamation of crap. And you go, no, I want to fix it. It's the right way to go. I definitely want to fix it. You got to stop at the fixing. You got to learn how to do this correctly. You got to need a hedge in order to sell premium. Okay. Listen, everybody comes into this trading world naked, but now you're going to need a hedge. You can't survive. Okay. Selling naked puts with no hedge, no one questions the naked pig. Okay. I'm, by the way, I sound like I'm trying to be a little demeaning to the naked traders. I am. No one questions the naked pig until he's served up for dinner, right? No one questioned little Porky Pig was not wearing any clothes. One thing you have to understand about survival in the midst of volatility, which we absolutely are, you need a definitive downside hedge in order to sell those puts. You need a definitive downside hedge, okay, in the midst of heavy volatility in any market that's to any degree unpredictable. You have to understand, okay, making money is important. Survival, okay, and making money, though, is what you're after. People forget that. It doesn't matter if you make money 90% of the time, because as I just showed you a moment ago, you're going to have this 90% probability of making money, and all of a sudden, one day you're going to wake up, and what happens? Okay, what happens? And anybody that's traded will tell you exactly what happens. If you sold options ever, tell the other people. Okay, what happens when things go awry? You're like, it went to hell in a handbasket. Sorry to be so blatant, but it went to hell in a handbasket, and it's all going to happen overnight. You're never going to have a chance to be able to get out. Okay, what I'm going to teach you now is a little bit more in depth. Okay, what I'm going to teach you now is what I kind of term the full Monty, and then we're going to show you how to circumnavigate margin. Okay, like you get it. Here's the market, and the market right now is basically trading $420, and that's the spider. We're going to sell some out of the money stuff here. We're going to sell some out of the money stuff here. But if we go down big or we go up big, you are toast. Okay. So what you have to learn about this is enter, okay, the hedges. So what is an inflection point trade? What is an inflection point trade? I'm actually going to show you the coolest way to understand this right off the bat. Okay. I'm just going to cut to the chase over here and show you what an inflection point trade breaks it down to. So I'm going to go into a product called SPY. And SPY right now is trading at roughly 420. Now, I'm going to go out and I'm going to sell an out of the money option. Okay, let's sell a put. We're going to sell, okay, excuse me, a 330 put, okay? And that 330 put is going to be trading for a whopping $2. Don't worry about a call. You could do a call too, but don't even worry about it. I just want to focus on the put. I'm going to bring this down below, okay? We're going to sell a 330 put, and for it, we're going to collect $2. What's the problem with this? Okay, the problem with this is sooner or later, we're going to go from 420. Okay, I don't know if we're going to make it to 330. You won't even survive until we make it to 330. There is one thing I will say without unequivocation that I can tell you definitively. If we go from 420, okay, and the market drops, for instance, even to 350, you'll never be able to hold the 330 put. You can't hold the 330 put. Why? Because your margin in your account is going to go ba-boom, okay? And go, what does ba-boom mean? What do you think it means? Okay. When traders talk about, they use this phrase like, I blew up. I blew up. Okay. What do you think blown up means? blown up, very often that comes from the margin calculation equation. You're not going to be able to hold it. So, okay, what I want you to think here, okay, is inflection point trade, okay? IPT, inflection point trade. What is an inflection point? An inflection point is going to use a hedge. I am going to layer a little bit of a trade right in here. Why am I going to layer that trade in there? Okay, I'm going to use what they term an inside, you ready? An inside hedge. Now I'm explaining strategically what's going on. I'm actually going to go into the market in a moment and show you the exact position. I'm using an inside hedge. Why? What is an inside hedge? It's a risk reduction methodology. The inside hedge, okay, is going to be in a certain ratio. Guys are familiar with a ratio? For instance, you can do like 1 hedge to 3 puts or 1 hedge to 2 puts, but you have this little inside hedge over here. And what the hedge does, that if the marketplace, let me draw it here, here's the market, okay? The market is in this like just wild pink color. If the market comes down, do you know what the market has to do? The market has to hit the speed bump before it could ever get down to your put. That speed bump, okay, it goes like this, boom, it's an inflection point, and you actually cross over. And the inflection point can actually give you one big, nice umbrella where you go, oh, it's raining outside, but you're unimpeded. The market can crash overnight down 10%. Not only are you going to survive, but the inflection point can actually help you. The down move, okay, is actually going to cause the trade to go up in value. Is there a possibility of a loss? You'd have to sell off, okay, 20%, but there's circuit breakers in markets. Overnight, we can't move down more than 7%, okay? Then you can drop 13%. At a 20% move, they'll lock the market down for pretty much the remainder of the day. At 20%, that's when you'll start losing some capital in here. But I wanted to bring to your attention, what is an inflection point spread? The inflection point spread allows us to operate and sell premium in the midst of the chaos. The inflection point hits this level where, boom, okay, it's like a speed bump, and we can use this on both sides of the marketplace. What we are intent on doing, let me delete this. What we're intent on doing is simply this. We are not going to go out. We are not going to go out and just sell, okay, a 330 put for $2. Okay, we can go out and sell the 330 put. We can go out and sell, for instance, the 350 put. You can sell a bunch of stuff, but you have to have on your what? Got to have on the hedge. Okay, without that inside hedge, you can't survive in this marketplace. Okay, how many people here want to kind of see it in real markets? Okay, because people don't get exactly how it works. I'm going to show you in real markets. 2 things I'm going to show you. Number one, okay, if you do this trade in your account, you're going to think to yourself, there's way too much margin. How many people have a problem with the margin they're going to be held? If you go out right now, most brokerage firms, you say, I'm going to sell naked calls and naked puts. You say that to your brokerage firm, they go, no, you're not. You're not going to do it because you're not even cleared to do it. How about forget all that? We can get you clearance. We can get you clearance to do anything you want. How about you can get clearance and you can do this with $2,000 in your account, $5,000 in an IRA. And you say in an IRA, you say, I can't sell naked in an IRA. Yes, you can. They changed the rules. They changed the rules now almost 3 years ago. There's only 2 brokerage firms, though, that have actually changed with it. Okay, I can't stress this enough. You absolutely can do this. So let's show it to you. Okay, I'm going to come over here into thinkorswim, and I'm going to tell you right now, most of the trades that I do these days are over here on Tastyworks. Why? Okay, because Tastyworks understands, all right, the margin restrictions. Tastyworks is actually allowing us, okay, to operate with very minimal margin. Nevertheless, a lot of people are familiar with thinkorswim, okay? First thing I'm going to do, I'm going to switch my symbol. I'm going to actually trade what's called an MES. Some people are unfamiliar with an MES. What is an MES? Okay, look right now with me. Okay, I just want to take you in here, and I don't want to confuse anybody. Right? This is a micro S&P. Micro S&P. It's trading for $4,205. What is the micro? Basically, it's the same thing as the spiders. What's the SPY? The SPY is trading for roughly 420. The micro is trading for 4,205. Then you have the S&Ps. Guess what? The S&Ps are trading for 4,205. Then you have the SPX. What's the SPX? Well, it's 4,205. Are all these basically the same product? Uh-huh. So what do you care? What do you care what you trade? You go, so why are you trading these MES? Because the MES doesn't tie up margin. They let you actually do this in an account with $2,000. Just doesn't tie up a lot of margin. And you, by the way, the MES is half the size of the spiders in terms of what you can make or lose. You go, that's not big enough. Good. If it's not big enough, you could trade the ES. The ES is the big brother to the MES. But I want to start you small. I want to go into the MES. Okay. I'm going to cut to the chase. I actually built a trade a little bit earlier. Say, this is the risk graph for an inflection point spread. Okay, this is the risk graph for an inflection point spread. And I'm just gonna really tightly zoom in on this and show you, just like I did a moment ago, okay, what can happen in the market. Here is where the market's presently trading. If the markets rally huge, we don't take a loss. We actually have degrees of profitability. If the markets sell off huge, speed bump along the way. Speed bump, okay? The first place I could start even taking a hit was 3,600 in the S&Ps. Where are the S&Ps right now? The S&Ps are currently at 4,200, okay? It would take, all right, an overnight sell-off of what? 600 S&P points for you to even actually lose money, the slightest amount of money. And you go, well, what happens if it sold off even more? First of all, it can't even sell off that much overnight because you can only have a 7% move. But okay, the sell-off initially helps us. We hit the inflection point. We make money if we sell off. If we rally huge, we also make money. See, how do you take a loss on this one? Okay, how do you take a loss? Okay, constant crash with you doing absolutely nothing. The inflection point provides you an incredible opportunity. I wanted to show you, can you lose money here? You can lose money. You can lose $1,000. That's with a full-on, outright, hideous crash to the downside. There's no if, in, or but about it. You can see everything, okay? You can see everything that I am doing in this particular circumstance. And the other aspect that I really want to bring up, the margin requirement in here is negligible. But this is actually an inflection point spread in a 1-to-1, okay? This can get even better. All I'm doing is hitting, like, by the way, I wanted to show you what's the margin in here. You want to see the margin? Okay. The margin in here is $436. So $436. So don't tell me that you can't do this without, without tens of thousands of dollars. It's the reason I'm trading the MES. The MES circumnavigates the margin restrictions. Did you know that the MES is an option on futures contract, and an option on futures contract doesn't even apply to day trading margin restrictions? You could trade the MES 100 times a day. They can't get you on day trading margin restrictions. Want to know why? It doesn't fall under FINRA and SEC guidelines. You got to learn how to do this. And I like showing people, like, you're like, wait a second, so you could take a loss. Every trade is going to have risk. Every trade, there can be loss. But for you to take a loss, you have to pass through incredible profitability, okay? If you fell asleep at the wheel and literally, okay, were unconscious for a week, you could possibly lose up to $1,000 on this particular, but that's a market going from 4,200 all the way to 3,300. It's an outright horrendous crash in the marketplace. People, I am telling you, you have got to learn how to do inflection point spreads. We have what? Very limited margin, okay? We've got a hedge. This is just the infancy, again, of the trade. It's what we're doing right now. This is why you want to use these inflection point trades. You can sell in small accounts. You can do this even in an IRA. With $2,000 in the account, you can do it in a regular margin account. If you have $5,000, you can do it in an IRA account. Produces positive theta decay, may enhance existing positions. You can actually sell options premium against existing positions once you know how to do this, okay? So provides a high probability of success. It's incredibly high probability of success, okay? You never need to buy or sell the stock, and you can be wrong on market direction, still produce profitable trades. One of the things that I emphasize, okay, in here, where did market direction even come into play? If we rally, okay, I'll make some money. It's going to be nominal, but I'll make some money. If we sell off though, selling off is not a bad thing. There's a wonderful spot to be able to make money even if we sell off. And again, I can amplify this. When I say I can amplify it, I can actually start to build more of a position where the inflection point is lower. This is like a 3-1, but look, now I'm making more money to the upside, okay? I can make a tremendous amount in here. I haven't even begun to sell calls. Like I haven't added the other side of this position. I just want you to see the variability, the flexibility of this. You need this in your life right now. It's what people don't get. Inflection point trades can bring in consistent returns while actually minimizing your risk. You want to learn how to do this. We're actually going to discuss criteria. Before I discuss criteria, here's a few live trading examples. all I want to do is show you, okay, literally like 18 months of results where I just went through, okay, and I show you everything I've done, okay, in terms of premium selling, okay. I am not going to display every single hedge in here because it's infinite numbers of trades. I'm going to show you the premium sales that I've actually done and where I've done them. By the way, variations of all the following trades can be done with as little as $2,000 in a funded brokerage account. It can also be done inside of retirement accounts. Just to kind of show you, this is actually a thinkorswim screenshot. And what I am showing you here, okay, this is the opening transaction, just a highlight. It's the opening transaction, the closing transaction, right? To open to close, the exact time I traded it, the option I traded, the opening price and closing price, okay, and the return. There's no question some of my returns will be mitigated by the fact that I have to use a hedge. But I just wanted to show you, okay, these are all live inflection point trade alerts. When I say trade alerts, these are trades, okay, that were texted out, or we actually have what we term push notification. I'll actually bring this up here momentarily. By the way, I'm just looking at iPads, and we actually use, we have a TheoTrade mobile application. So for those of you that don't even reside in the United States, okay, we do push notification. So that push notification will actually come through. So you can see the trades that we're doing, when we're doing them, okay, what we're actually buying and selling everything for. So these are trade alerts. If if you don't like push notifications, we also text message. Most people get both, okay? 18 months of results, here we go. There's a bond short put. By the way, I'll trade Tesla, I'll trade bonds. I know you may not be comfortable with bonds. Why do I like bonds? Bonds are actually really great because they're very minimal margin and there's excellent return for minimal margin. And I love the risk in them. The risk in them is pretty negligible. So bond, IWM, all I'm doing is just scrolling through. These are just the premium sales. Okay, SPY, QQQ. By the way, yes, I'm all the way back to 2021. Okay, and look, there's going to be losses in here as well. Like I'd have no problem telling you guys that, right? Once you actually know what you're doing, you get your feet under you in terms of actually selling premium, you don't have to trade like spiders or MES, okay? Once you know what you're doing, and again, I'm just scrolling through some of these. Once you know what you're doing, you step up. You step up and you start trading some bigger products. Bigger products could actually be things like, well, the S&P options on futures. He's an ES short put. ES short put, okay, this is exactly 5 times the size of the spiders. We don't trade SPX. The SPX, you have no chance. By the way, inside of the SPX, and I know some people trade it, and you're put off by my last statement. My last statement was, we don't trade the SPX. I personally traded the SPX. That's where the group that I worked for, we made markets in the SPX. I know the SPX better than any other product. I don't like it for retail clients. I don't have to like it. I don't even want to like it. And I'm not going to sit here and sugarcoat the fact we don't, okay, teach and trade in the SPX because as a retail client, your survival is the most important thing to us, okay? You getting hurt doesn't help us. Doesn't help us, doesn't help you, doesn't help any of the brokerage accounts out there. Why don't we actually trade in the SPX? It's a professional level product, okay? If you need to get out, like, and you're not experienced, when I say experienced, If you don't have 10 to 15 years in this business, you have no business whatsoever trading the SPX. Even with 10 to 15 years, you got to be pretty savvy. Why would you trade it over S&P's options on futures? S&P options and futures are actually open 24 hours a day, 5 days a week, more like 23 hours a day, but you get the picture. Okay, it's a great product. Look, just scrolling through, look at all the returns in here, 51%, 51%. These are just premium sell after premium sell after premium sell. By the way, then I actually ramp up the complexity. I do some trades like Christmas trees once in a while. The Christmas tree, you know what a Christmas tree is? It's an advanced version of an inflection point spread. See, clients love, here at TheoTrade, they love the Christmas tree. And I said, it's Christmas every single day. We'll just do inflection point spreads. The Christmas tree trade is an advanced version of an inflection point spread. But again, I'm just scrolling through over here to show you return after return after return. We're still back in 2021. Okay. By the way, that was another nice Christmas tree in here. Okay. All of these trades, again, all are live trades. In fact, when I talk about like a Christmas tree trade or I talk about the spiders, please, as I said, everything that we do here at TheoTrade is no holds barred. Okay, everything we do. If I type in spiders, all I'm showing you right now, right? Let me go back. Watch. Let's go back 360 days. All the trades that I'm showing you are nothing more, okay, than me opening and closing positions in my own account. That's it. Okay. Right? See, to open, to open, to open, to close, to close, to close, to open, to open, to close, to close, to close, to close. You can see all of it. Custom positions, you name it. It's all in here. Okay. All I did was took some of these custom trades and, called it a Christmas tree. They're inflection point spreads, people. They're inflection point spreads. That is what we are doing right now. And you can see, again, all the order history, right? The open, the close. All I did was actually copy and paste from thinkorswim directly into this PowerPoint presentation. Okay. I'm just kind of scrolling through. Now we're up to this year. Okay. Another Christmas tree trade earlier in the year. And people are taking a look. They're like, okay, I get it, man. I get it. You do a lot of trades. By the way, I stopped in May, not because anything went wrong. I stopped in May because there were so many trades in here. I'm like, you know what? Here, I'll show you something interesting right now. Okay. I'll come in. This is TheoTrade. And inside of TheoTrade, when I say this is TheoTrade, this is actually a broadcast room where this is live. All of our clients are actually talking back and forth right now. But I want to show you there's different portfolios. Okay. And in those different portfolios, all right, you can actually come in here and work your way in here and actually look, okay, all the videos that update you on here. But more importantly, okay, you can actually look at what we term the TheoTheta portfolio. What the TheoTheta portfolio is, it's all the trades we just discussed. These are all the open trades, all the closed trades. You can see everything. Okay. I sold this to open, to open, to open. I've got 4 different positions currently open in this portfolio. I've got another call open over here. Okay. Down below, you can switch and actually look at all the closed trades. All right. Look at all the open and closed trades that we have. Okay. That portfolio is also, of course, being shot out to you kind of in real time. Again, if you don't have a lot of time, it's not a big, huge problem. All the trades that we're showing today are displayed live here at TheoTrade. The trade results, this is not sitting in front of the screen, all day long. This is part-time. Inflection point spreads, it's hands off. Use this set it and forget it order types. You can even use GTC, which is good till canceled. So even a fraction of your time is enough to see good results. Okay, it's what you need for a challenging market. So I make no two ways about this. Okay, I don't have a great feel for what the excuse me. I don't have a great feel for what the marketplace holds right now. Okay, I think it's okay to say that. In fact, this is a FedWatch tool. You know what this FedWatch tool says? It says half the world thinks there's going to be a 50 basis point hike. Pretty much the other half of the world thinks there's going to be a 75 basis point hike. You want uncertainty? I mean, it's just proofs in the pudding right now. 60% chance there's going to be a 50 basis point increase, 40% chance of a 75 basis point increase. Don't worry, that'll change huge. Okay, you got to learn a new market skill set that's going to last a lifetime. Using inflection point trades, okay, it's going to help offset a lot of the inflationary risks because inflation just drives volatility. Okay, driving volatility, you want to sell that volatility. You got to get on the right side of the market. You got to learn the skill set. You don't want to just survive volatility with a long portfolio. You want to thrive in it. you got to take advantage of that volatility with right now selling options premium. Again, what our members are saying, Kevin Burks, I absolutely love this freaking website. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. Can't get any work done. TheoTrade is the best by far. I'll be with them for the rest of my trading career. Here's another one that came in relatively, well, recently. I'm up $80,000 since January 2022. Okay. Again, some characteristics of inflection point trading. The attributes of an inflection point, trading system are undeniable. You never have to buy or sell the stock. Risk can be dialed in. One thing, and I really, really want to stress this to you. One thing, we'll teach you how to dial your risk in. Okay, meaning that you don't have to sit there and be like, well, a moment ago, he showed me on the risk graph over here, right? So I went to the Analyze tab. Let's cruise back over to the Analytics. Go to the MES. You go, oh, earlier he showed me he's like, I could take as much as like maybe, like $1,000 of risk in this trade. You can actually fine tune this to anything you want, depending upon the ratio. Okay, we teach you exactly how to do this based on account size. You're never going to use a stop order. You will never hear the word stop order here. You're already dead if you use stop orders. You can vary time frames to minimize risk. Probability of profitability is high. It's the perfect strategy to enhance a stock portfolio. You obviously can build and account returns with it. But new products also allow, that's the micros, allow for sale of options in nearly any account size. So you just have to learn how to build a portfolio of options. Like, don't let the options portion of this intimidate you. Inflection point spreads can be done for minimal credits and minimal risk, but you do have to learn to do this correct way. Like, I don't want anybody to run out and be like, I'm ready to trade, baby. Look, we're selling out of the money options. And we're using these little tiny hedges on the inside to mitigate our risk. Again, they're like speed bumps along the way, but you can't operate in this business without them, okay? The sale of premium is this, and selling out of the money options, okay? It's wonderful. It's like 90%, 95% probability, but it's also this massive power saw. If you had this huge power saw, you're like, man, I could build a house so much faster with a power saw than I could just using, some hand saw. But if you don't know how to use a saw correctly, you're going to lop off a couple of fingers. And options are the exact same thing. Options can be the quickest, the fastest, safest, the easiest way to get where you want to go in the market. But if you don't know how to use options correctly, you're going to lop off a couple of fingers. And I want you to know that you can sell inflection point spreads and manage the risk. Okay, if you have limited options experience. As I said, don't let the options portion of this intimidate you. And the reason I say that is, okay, and I'm just going to cut to the chase. We have an entire start here menu, options 101, options 201. It's part of TheoTrade. This is like, again, it's no holds barred. As I started in this presentation, when I say things are no holds barred, like I mean it. You come down to the account statement, okay? Forget about, what I made in the MES or what I made in the spiders. Look at aggregated profits and loss. Look at aggregated profits and loss, okay, across a multitude of accounts. I'm up approximately $172,000 on a year-to-date basis. You can see every single product that I've traded. Obviously, I'm trading, well, MES, a lot of options on futures. I'm trading a lot of ES. I'm trading a lot of micro Nasdaq. I'm trading some bonds, okay? Look, not everything is profitable in here. Like, I took a $16,000 hit. I mean, I trade, people, but don't tell me I just can't make a lot, can't lose a lot. Okay, every one of these products, you can see exactly what I made or lost. And that's why I say there's products I'm going to be phenomenal in. There's products I'm not going to be so good in. Okay, here's the bottom line: overall profitability. Okay, that's what we're here for, is overall profitability. Okay, and I don't show you these profits and losses and take this stuff lightly. You get to see everything we do every single day. As I said, it's like just this no holds barred approach. We can show you how and when to trade inflection point trades in a matter of a couple of hours. But what we do here at TheoTrade, here's what differentiates us. Okay, it's not just a strategy. Like, inflection point trading is not just a strategy. It's criteria. It's a recipe. It's a recipe to be able to get in and out of this particular position. And it's a recipe with all these different variables. What if we go up? What if we go down? What if we crash? It's the same thing. Like, you wouldn't bake a cake without a recipe. I guess you could bake a cake without a recipe, but you would have had to do it like 10 to 15 times. A little bit of flour, a little bit of water, a little bit of sugar, like, you guys get it, okay? but you need the specifics, the nuts and bolts, how much to use, where's the hedge, what's the ratio supposed to be, okay? This is what you need to know to successfully trade inflection point spreads for a living. You got to know what underlying stocks or indices make the best inflection point candidates. So what are, again, I'm not trying to be facetious with this, okay? And what are some of them? By the way, I love what Leslie was asking. What are the specs in the hedge? That's the right question. Leslie has the right question in mind. What are the specs over there? Okay, we're going to talk a little bit more about that, but that's what criteria is. How many hedges do I use? Like, I'm going to tell you right now, look at the underlyings. I just showed you 18 months of my trading in there. I use the MES. I use the ES. I do trade spiders. Okay, obviously I said I like the bonds. I even threw a little Tesla in there, as a little bit of a hiccup, right? What should be the volatility I seek out? This one's critical. Too much volatility, you're in trouble. Too little volatility, and you're in trouble. You look at stuff like Walmart. Walmart's a no-go. Like Walmart will kill you. But at the exact same time, people go, I want to find the most volatile thing. What, you want to go into like GameStop? You're dead. The volatility has to be within a given range. We'll actually give you the range. What do you think criteria is? Criteria is actually taking you through the gauntlet of a marketplace. You want to see a gauntlet? Here's the gauntlet. Go back to the spiders for a second. Just go back to the option chain. Ready? Look how many options are listed on here. Okay. 2-day, 5-day, 7-day, 9-day, 12-day, hut, set, hut, hike, 72-day, 100-day, 128-day, 51-day. I don't know what to do. Where's the hedge go? Where's the hedge go? What option expiration do I select? What should be the delta of the option I sell? What options do I buy? This is the hedge. What options do I buy? The hedge is an inside hedge. What's an inside hedge? How many do I actually buy? What expiration date? How do I build the position? Do I need a large amount of capital to do this? No. What's the right amount of risk for you? Oh, you got to be able to dial in risk, because you're going to have to weather some storms. Sometimes the market's going to rally forever, and then sometimes it's going to sell off huge. You can be like, I can't take the pain. You can, as long as you dial in the right amount of risk for you. We actually teach you, like, literally how to ratio this properly. And that the first couple of times that you sell premium, you want to be, okay, a small little peanut in a very big ocean of traders. Why? Because you want to figure out like who you are. Okay. What are the percentage returns supposed to be? You're supposed to make about 50%. How do I protect myself from market crashes? Using an inside hedge. Okay. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Trading, it's all about answering the what ifs. What might be a good stock ETF candidate for you to sell premium, the correct expiration cycle, how much capital do you commit to generating premium, what strike options do you sell, what strike op with definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. By the way, the idea of a checklist, it comes from the idea of like you sit on an aircraft. If you've ever sat in the front of the aircraft prior to taking off, okay, pilot walks into the cockpit and they immediately jump into a checklist. Okay. What we do here, okay, is build those types of checklists. Okay. Not only is the pilot doesn't just go in there and they go, okay, we're pulling out of here, throttle up. Okay. They go through this highly detailed checklist to make sure that every variable is in check. Then when they're in flight, okay, they can have, issues. You're going to have issues too. What if the market goes up? What if the market goes down? What if the date moves forward? What if expiration is coming? What if? You have to understand all of those unique variables. Dividends are coming. All those unique variables are covered. It's like a flow chart. If this happens, go here. If this happens, go here. When you were a kid, you had those books that were like, you get to pick your own ending. You don't get to pick your own ending here. The marketplace is dictating the end. All you have to do is actually follow the flow chart and be like, all right, markets are selling off. Let's follow this. And it'll take you there. TheoTrade is the answer to your questions. We're going to give you the right probability. We're going to give you how many option contracts for the account size. When do you close the premium sale? Like, how much am I supposed to make? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? It's about how, it's about why, it's about when, it's about what price. I'm telling you right now, this is just, I'm scraping the surface, the beginning of the variables while trading inflection point spreads for a living. I'm just scraping the surface of the beginning of the variables. Okay. You can read about inflection point trading. You can read about selling premium till you're blue in the face. I bet you right now, if you Googled, inflection point, or you Googled, for instance, selling premium, 10,000 pages are going to come up. Maybe even how to build a couple of trades. Okay. but none of them have criteria. They just do not have TheoTrade's recipes for success. 20 plus years trading experience. That's just me. We have 7 other full-time instructors. I had access to client order flow for 15 years. I ran both thinkorswim and TD Ameritrade's entire education group. At one point, we had 768 people, okay, under us that were all involved in education, specifically at TD Ameritrade, all accessing client order flow to find what works best. That's where these recipes for success come from, okay? We've literally viewed and studied millions of trading accounts. Criteria is the recipe for success. The inflection point trading system requires the utmost attention to detail, as do anything when you're following a recipe. But we spent years fine-tuning the trade setup. We spent years going through the criteria. And when you approach the section, okay, on executing the trade, you must follow the steps to build a trade. We built a 4-hour course, okay, the inflection point trading system. Okay, I'm going to tell you right now, we have an incentive. Don't panic, because a lot of people look at this and they immediately think, here it comes. We don't, at TheoTrade, sell individual courses. We do not go out and sell you an individual course. So before everybody kind of tunes out and they go, oh, it's another course I got to buy. Like, listen, before I even explain what an inflection point trading class amounts to, I get it. People go out, they spend $500 in a class, right? Spend $500 in a class. Then you have to spend $500 on some indicator to go with the class. Before you know it, both of those are obsolete. You got to spend $500 in a class to learn that the indicator from the previous class is obsolete, and so is the class, because it's a new class for $500. But then there's another indicator, okay? Before I go any further, again, for about 15 years, so I ran the education group of thinkorswim and TD Ameritrade, and I've seen everything out there, meaning like I've seen every educational venue out there. We built TheoTrade, okay, to be a vast differential, a huge departure, if you will, from everything in the entire education industry. Our first and really only goal here is to get you educated, to get you ramped up, to get you executing effective trades, period. And we'll do anything we can to support you. We do not sell individual classes. When you come into TheoTrade, you get access to everything. What's everything? Everything, okay? When I say everything, every class that we've done since we launched TheoTrade in 2016. So every class, okay, over the last 6 coming into 7 years, you get access to. Every indicator you get access to. Okay, you need to get ramped up because you don't even know what a call is. We give you access to that. We give you access to a library of classes, okay, that rivals the amount of content on Netflix. Okay, everything is recorded from every single day of every single session. We have hundreds now of classes that you can access. Imagine 8 instructors. We just rotate and just keep doing classes, okay, and more classes in here. Every nuance and every genre of trade, okay? Different instructors cover different genres of trade. And I'm letting you know this right now because we don't want anybody to come in here under the assumption that, you know, you have to learn everything. We want you to come in here and focus expressly on inflection point trading because it is what is working right now. It's been working for the last 18 months. The only thing we've changed right now is we've actually morphed the hedge into the inflection point. Okay, it works better for retail traders, okay, than what Ultima was. Those of you that have heard that term Ultima is also selling premium, but inflection point, it's easier, it's gentler, it's all done in one transaction. This is a 4-hour course, and this 4-hour course was just recorded quite recently. It's archived. It is available immediately. Okay, you can enroll for it today, and I'll explain what enrollment is, and I'll explain everything that comes with TheoTrade. Because I just said, like, you know, we don't just give you a class and then give you a little pat on the butt and say, go ahead, okay, make a trader out of yourself. We give you trades. So after you take the class and listen to the class even tonight, you'll be ready and you can actually execute trades tomorrow. How do you get the trades? We send them to you. We send you the trades. It's no problem. Okay, the class slide deck that includes all of the detailed criteria, the recipes, that checklist is available immediately for download. Meaning you can enroll right now, you can download the checklist. Okay. We also have mobile application. And on the mobile application, if you're not sitting in front of your main computer, you can just stream this even offline. You can actually download onto your mobile app and then stream it later, okay, from 30,000 feet if you so choose. You can even speed it up, slow it down. But I want you guys to know, all right, yes, you're here for inflection point trading, but you get access to everything else. Yes, you get access to all the portfolios. Yes, what I showed you over the last 18 months were trade alerts that went to clients. Okay, and you get access to all of that. We don't upsell for 50 different classes over there. Classes are part of TheoTrade. We have another class coming next Thursday. We just did a class like 2 weeks ago. All right. I mean, Blake Young did Z spreads recently, which was an absolute out of this world class. Okay, all of that is included. Let me get through what the inflection point class is, and then I'll explain a little bit about TheoTrade. So inflection point spreads. This is the curriculum. You're going to learn sell premium and hedge in one transaction. So it's one compact transaction. You're going to create a high probability position that generates monthly returns regardless of account size. Okay, discuss and discover how to hedge existing positions, even the most volatile environments. One of the coolest things about inflection point trading is it can actually teach you how to mitigate risk of even stuff that you have on right now. So you go, oh, I've got some stock on right now and I'm not comfortable. It's okay. We can actually help you with that. We give you detailed criteria, okay, for actually keeping risk at a minimum. One of the things we're also going to teach you is you're going to learn how to analyze. So analytics of inflection point spreads are so cool because before you even put the trade on, you're going to know exactly what you can make and exactly what you can lose. There's no if, and, or but about it. People, I don't want there to be any ambiguous nature to anything you're going to execute. You need to know, like, hey, listen, in this next trade, I can make $1,000, okay, or I can lose, X amount, but I don't want that to be ambiguous. I want you to know exactly what you're getting yourself into for the account size, because that's how you're going to measure how many contracts you're going to do. And you're going to find how many of these spreads you can actually safely allocate for any account size, whether you have a $2,000 account, a $5,000 account. I'll tell you right now, okay, we even encompass, if you have a multi-million-dollar account, good, go for it. And reach out to me on email, right? So that's the inflection point spreads trading system. Again, you get access to everything at TheoTrade, but this is the course that obviously I'm covering today. TheoTrade is also a completely riskless trade. Listen, money back guarantee. What we do here at TheoTrade is we enroll you, okay? And here, I'll make this even easier for you. We have a special specifically for today. Okay, you can enroll today for $297. It's $297, $300. Okay, it's for the next 3 months. So basically, you're paying $100 a month. That is not an introductory rate. You say, what do I do after 90 days? Do it again. What do you want to do after 90 days? Do it again. But you have to re-enroll. Like we're not here to put you on a membership. We don't do membership anymore. For $297. Again, it's not an introductory rate. It's not a reoccurring bill. If you do not like us anytime in the next 90 days, do not call us. Okay, I don't need any excuses. Listen, email support@theotrade.com, full refund. You know what's cool about the full refund? You can sit there and watch all of the stuff through TheoTrade. Okay, it's like watching Netflix. Netflix doesn't even do this. Does Netflix give you 3 months of free Netflix? Okay, you're like, I watched Batman 6 times. Okay, did you learn anything? No, but it was interesting. Anyway, there's no excuses, no questions, no commentary. Listen, you can even watch the inflection point trading system class. It's okay. You can follow some of our trades. If you are not happy for any reason, just get your money back. There's one thing that I'm so adamant about. We have just around 6,000 clientele right now on TheoTrade. We want people that want to be here, period. Okay. If you're thinking about it, listen, check it out for the next 90 days. You can't go wrong. Right? You don't know if something's right for you until you check it out, And again, I just stressed you, there's absolutely no risk. We don't ever want an issue. It's $297. I could give a crap about the $297. Okay. And we just want everybody to understand there's nothing out there in this education world. You could go out and spend $30,000 on stock market education. It will pale in comparison to what we're doing here at TheoTrade. You ask anybody, okay, that's been inside of TheoTrade, there is no other education venue anywhere, okay, on this planet that is going to come close to what we can do here at TheoTrade. And if I sound fairly adamant about that, okay, where do you think the instructors came from here? Every one of us has a minimum of 15 years of experience in the market making, proprietary trading, hedge fund, and brokerage world. Some of us have experience in all of those areas. I am market making, registered investment advising, brokerage world. Before even launching TheoTrade, I had 15 years just in the brokerage world, market making prior to that, but I grew up around this. We have Steve Slim Miller, okay? Guy has almost 50 years of experience right now in the marketplace. We have Jeff Bierman. Jeff Bierman built the charting system for thinkorswim, okay? Blake Young was an early thinkorswimmer as well. We have Brandon Chapman, also coming from the thinkorswim TD Ameritrade world. It goes on and on, okay? We have depth here way beyond what anybody else has. There's a lot of education. They're going to charge you $4 or $5 grand, but you know, a lot of these people were like, what were you before this? I was an elementary teacher, okay? Not me. I grew up around trading. By the way, I didn't do like a degree in trading. I did a degree in molecular genetics. You want fries with that? I'm telling you, there's just no excuses. It's $297, okay? And here, I'll even throw the website up right now. It's theotrade.com/I. I is in igloo, P is in Pete, T is in Tom. So theotrade.com/IPT. IPT stands for Inflection Point Trading. The reason I'm going to take you to the site really quick, then I want to explain, okay? And please give me time to explain. I will give you every nuance, okay, of what we are doing here at TheoTrade and what is included, okay, in TheoTrade. So it's theotrade.com/IPT, okay? There are 30 riskless spots, meaning that, by the way, you can come in here and you can ask questions directly in chat, or you can ask questions directly in here. When you click add to cart, it's $297. It's $297 for 3 months. And again, everybody always asks, what do you do after 3 months? After 3 months, if you want to do it again, you do it again. The one thing I ask you under phone number, put your phone number in if you want to receive text messages, because all you're doing is actually in the phone number, you're just enrolling for text messages. The key class today is clearly inflection point spreads. It's what works, okay? By the way, it's just $297. There's no if and or but about it. If you don't love it at any point, just get your money back. Like, we get it. And the most important thing is that you get that too. Now, what our members are saying, Marianne, because of Theo, I closed my entire portfolio with profits, 0 loss, I'm all in cash. I love this one because this doesn't deal with inflection point trading. This deals with somebody that, okay, we went out there and said, listen, a lot of people are down massively on a year-to-date basis. Look what the markets have done, okay? I love stuff like this where people come in there and they go, yeah, I closed everything with profits, you know, thanks to you and the team. And let's talk a little bit about some of the bonuses. And I say bonuses, listen, TheoTrade, no gimmicks. I don't even like the term bonus. We give you everything. TheoTrade goes beyond one class or one indicator. We get from like my days at like TD Ameritrade, my days at thinkorswim, people would go to these classes and they pay 500 for this and 500 for this and 500 for this. They had no money left for trading. Okay, that's not what we're about. We give you everything to trade, everything to invest. It's at one place and one price. First, we give you a quick start beginner's video guide. What is a quick start beginner's video guide? And again, I'm going to run through this pretty quick, but I want you to see it. It's the start here menu, options 101, 201. If you're a novice, you got to watch these videos. You're like, it looks like some work. You don't have to watch every video in here. There's a lot. Hey, I'll even argue that for those of you that are highly experienced, you got to watch order execution part 1, 2, and 3. That's another, it's like one of my specialties, because you sit there and watch people trade for years, you know every caveat, like how do you get filled at better prices? We teach that, okay? All of this is to get you ramped up. So if you're an absolute novice, the quick start beginner's guide, okay? Bonus number 2, there are hundreds of trading classes. You get access to them all. Listen, you're not going to remember all the names in here, but you know, we give you inflection point trading. We give you the in-out spread, survival, volatility back spreads. You guys, let's just cut to the chase. You want to see what they really look like? Okay, let's go back over to TheoTrade for a second. This is TheoTrade, okay? And in TheoTrade, we've got everything from like archives, class archive, but let me actually show you. This is the TheoTrade class archive. We're broken into options, option newbies, technical analysis, okay? Just because I don't look at charts, I find people, okay, to be instructors here at TheoTrade that do not have my skill set. They have a completely different skill set. Jeff Bierman is a market technician. Jeff Bierman is also a professor of finance at DePaul in Chicago. You can go pay $47,000 a year to listen to Jeff Bierman lecture, okay? Or you can get him here for $297 for 3 months. We have day trading, stock trading, bond trading. Just to give you an idea, I'm the options geek. I'm the resident options geek here. Z spreads, inflection point spreads, income accelerator, okay? Ultima income generator. It's all in here. You name a strategy, okay? You name a strategy. This is just options, people, okay? Are you into it yet? Because it's incredible how much we actually have in the archive. Like Z spreads, when you click on Z spreads, this is a Blake Young class, okay? Class is now playing. Now you can maximize the class, you can minimize the class. Cool thing though is you can download the slide deck right from here. So you get every class. Next, so that's bonus number 2. And again, there's hundreds of classes. I'm just scraping the surface over here. Bonus number 3, you get access to our chat room. Now our chat room includes, basically we broadcast all day, all trading day. We do text and push notifications. We do real-time trades, real-time ideas. We do daily coaching sessions with timely topics, stocks, options, and futures. Here's probably the biggest thing that we do, okay? And I urge you to watch this. We answer emails. We answer emails. You can ask us trade-related questions. Don't hesitate and be like, my dog's girlfriend's brother had a question about trading, okay? What about you? Do you have a question for trading? Yes. Here's what I have to do. Just ask the question. Most of us can come from this background, like we know how to answer your questions. If we just answered an email or 2 in the next 3 months, do you think that's worth $297? Okay. I bet you I can get you out of $297 in trouble in 1 email. And I'm dead serious. Nobody ever emails me for anything good. They only email me, okay, when all hell is breaking loose. And if I give you an idea how to roll a position, how to actually mitigate exposure, how to actually look at it from a different angle, think that's not worth $297? Who else are you going to talk to? You're going to get on a Reddit board? I'll go into Wall Street Bets, okay, and ask an 18-year-old child that's sitting in mom's basement, okay, trying to trade GameStop. There's no one else to talk. You can't call TD Ameritrade anymore. They're never going to answer the phone. And if they do, they have nobody that's willing to answer any questions. You can't call even Tastyworks anymore, okay? There's no one to talk to. We're it. Ask us, okay? Ask us in the chat room in real time. Ask us an email. That's what all of this is for. We give you access, though, to the full chat room. And I want to make this clear. This chat room, by the way, is live right now. When I say live, okay, it's live. This is Tony Rago. Tony Rago is actually setting up an execution specifically inside of the Nasdaq. He is an intraday trader. So if you want to ultimately see, okay, what is going on an intraday basis, listen to Tony Rago. Freeze the screen over here. You get access. You know, again, other education venues, they'll charge you $300 a month just to access their chat room. Go check it out anywhere. Right? We give you access to the chat room. We give you access to all the classes. We give you access to new classes. There's a new class coming up next week with Matt Williamson. Okay. Here's the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Okay. Everybody has over 15 years of experience. Again, market making, hedge fund, registered investment advisor, brokerage. Okay. We come from it all. And almost everybody here has been at TheoTrade pretty much since inception. You know, the only straggler was Matt Williamson. Matt's now only been with us for about 4 years. Okay. Nobody ever leaves here. It's because it's, you know, these guys just, they go out and do their thing. They trade throughout the course of the day. Jeff Bierman moonlights as a professor, okay, over at DePaul, and it works. Okay. By the way, we have 3 CMTs on our crew. Jeff Bierman's a CMT. Corey Rosenblum's a CMT. Brandon Chapman, of course, is a CMT. Okay, this is all of us actually working from home during the worst parts of COVID. That's the island. All right, we give you access to all proprietary indicators and scans. Any codes that we build for thinkorswim or otherwise, we give you access to them. I'm going to give you the auto expected move in a moment. Bonus, okay, bonus number 4, TheoTheo live portfolio. The live portfolio, this is what I was showing you earlier, is every position opening, closing. If I open it, close it, okay, you get to see all that we're doing here. It's a no holds barred trading approach, okay? We do full disclosure on all trades, opening, closing, hedging positions. You get to watch me trade, okay, multiple portfolios. We also have what we term a Theo Theta small portfolio. Theo Theta, it's doing little inflection point trades. The little inflection point trades are predominantly done, okay, in the micros, the MES. Of course, you can see the portfolio. If you can't tune into this during the trading day, we do inflection point trading update videos. Every Friday, I will shoot approximately a 12 to 13 minute long video that updates you on every trade that I've done. You don't have to sit here throughout the course of the week. We do text messages, we do push notifications, and we do an update video to get you up to speed of the update video is why I did the trade, how I did the trade. Okay. Bonus number 5, technical analysis toolkit, right? We have almost 30 different classes now inside of technical analysis. Bonus 6, day trading treasure chest. Bonus 6 includes a tremendous amount of course material specifically on day trading, okay? Bonus 7, mindset mastery. I don't often say this. I would write this one down. I don't want you to forget about it. There's hundreds of classes in our archive. The 5 essential building blocks to successful trading with Steve Miller. Unequivocally and hands down. I don't care how experienced you are, how new you are, everybody should watch that. Steve Miller is the in-house psychologist here. Okay, there's market psychology classes that people charge $3,000 or $4,000 for. This guy, okay, during the 1980s, when he was still on the trading floor, okay, Steve Miller was making or losing 7 figures a day, $1 million plus a day that he was making or losing. It was in the 1980s. You tell me, okay, that a lot of capital back in the 80s, it's ridiculous. It's huge. It's one of the biggest traders. What you will learn from him, okay, I can't stress enough. Write it down. All right, $297 for 3 months. You get access not only to everything, but you get classes like this. We could easily charge $3 or $4 grand for that one class. Bonus number 8, quick start guide to Ultima. This is just a quick start guide to getting into selling premium. Again, what our members are saying, thank you for the reply. It's very much appreciated. TheoTrade is the first trading service that I'm actually making a profit with, and one where I can see a pathway to retirement. Comes from Pat. We give you everything: classes, coaching, email access, live trading, indicators and scans, everything you're going to need to succeed. We've literally built the Netflix for traders. It's $297 for 3 months. Again, go to TheoTrade.com/I is an igloo, P is in Pete, T is in Tom, IPT, TheoTrade.com/IPT. Okay. I'll reiterate to everybody, there is a 90-day money back guarantee. There's no excuses, no questions. If you receive a refund, you still get to keep bonus number 1. What was bonus number 1? It was like all the options 101, all the options 201. It's the entire Start Here menu. Okay. We want everybody to get ramped up. We want everybody to learn this. But again, there's absolutely no stipulations to the money back guarantee. We've changed a lot here at TheoTrade, and we want you to know, okay, what are the stipulations? Do I have to do a little dance, make a little love, get down tonight? No, there are none. By the way, you can also view the inflection point class, okay? You view the inflection point class. There's an interesting thing. We've had people come to TheoTrade, okay? They pay $297, and they have this thought like, I'm gonna pay the $297. I'm gonna watch everything I can. And on the 89th day, I'm going to cancel. You can do that. It's okay. I'll still love you. But you know what's funny about them? Every one of those people come back. Every one of those people come back. They're like, I never should have left. What you guys are actually teaching, like in the trades, is totally invaluable. You just can't buy education like this anywhere else. Okay. Why is $297 like our price point? There's 6,000 people on the site. It's not what it's about. It's about creating like a real trading venue. You know, and we've been doing this now since 2016 as TheoTrade. Before that, you know, we were TD Ameritrade. Before that, we were thinkorswim, and that's where our roots ultimately come from. But I'm telling you, there's no risk to you whatsoever. Okay, get into TheoTrade now. We're going to work with you directly. The only thing I do to incentivize people to enroll today, there's 30 spots on the riskless deal. Okay, there's a few hundred people in, like, you know, logged on live to this session right now, but there's 30 spots on the riskless deal. That means enroll now, be one of the first 30 people. Okay, we give you unlimited email mentoring. So you can email us anytime. It's $297. It includes inflection point trading, access to the live trading portfolios, no stipulations on there. And we've never offered that before, where there's no stipulations with inflection point trading. You can send us the trades, right? So again, I want to reiterate for those of you that are actually right here, okay, jump over here. Again, this is TheoTrade.com/IPT, okay? You can actually, when you click add to cart, I'll just remind you, please put your phone number in there. It's $297. That's it. And by the way, there is no reoccurring charge ever put on your card. You have to actually tell us if you want to continue. This is not like a gym membership that you can't get out of, right? What our members are saying. This comes back in March, but my closed year-to-date profit from Ultimate Trades is paid for the yearly subscription. Ultima is actually a version of premium selling. This is everything you get today. Inflection point spreads, beginner's guide, over 100 different trading classes. You get access to our chat rooms and all the portfolios. You get access to the TheoTrade live portfolio. You get access to the technical analysis toolkit, the day trading treasure chest, the mindset mastery, okay, and the quick start guide to basically selling premium. Again, comes from Jeremiah. My first 4 trades following exactly the details in the class, closed out using GTC orders set right after getting into the trade. This paid for your class in less than a week. Very thankful I subscribed to your services. Keep up the good work. Again, TheoTrade.com/IPT. Oh, one thing I did forget to bring up. As you go over to the site, those of you looking for the indicator, the auto expected move indicator is found right at the bottom of this page. Okay, I just wanted to make that. Now I'm going to give you a moment or two to ask a couple of questions, but I'm going to go through just a few general questions. Okay, these are just some more emails that came in. And again, I want you guys to understand that you can email us and say, I am in trouble. What do I do? And I'll just show you. I'm in trouble. What do I do? That's what this guy, Todd Summerall, came in and said. Don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want, and I do. The reason I use that email is because I want you to know that you can actually email us and say, I'm in serious trouble over here. What do I do? I'll tell you flat out, smash the position. Okay. And I'll give you all the variables. I'll say, if you close the position, obviously you're going to, cut all the losses off, but you're going to cut off some of the profitability, or I'll convert your position into something that you're more comfortable with, right? Let me answer a couple of questions. And again, I stress, enroll now, TheoTrade.com/IPT. One thing I do, I'm going to answer some general questions here for you guys momentarily. I'm also going to read off names as you guys are enrolling. By the way, it takes about, I'm just going to look on my phone here. It takes about 4 to 5 minutes before I can see your name populate in here as you're enrolling. So I'm going to go through some general questions, then I'm going to go through some specific questions as you are enrolling today. And again, it's $297, but as you're enrolling today, I'll read off just your first name and last initial. And the reason I'm doing that is just to let you know that you, suffice to say, you're one of the first 30 people that, you're into the riskless trade. So I want people to at least feel comfortable with that. All right. So people always ask me, what do I need to get started? A laptop. In fact, I will make the argument you don't even need a laptop. I apologize. My iPad is actually here. It's plugged in. It's not plugged in. You don't need like the iPad Pro, whatever. I trade a tremendous amount, okay, off of an iPad. I use, and I'm not joking when I say this one's the Walmart special. It's the cheapest iPad you can get. I think it was $299. Bought at Walmart, okay? And after I use it for about a year, I just hand it to the kid and buy the next iPad that comes down the line the next year. I don't have like $1,000 iPad. I don't have one iPad Pro in the whole house, okay? I use still an older iPhone as well. Not that I'm not into technology. It's like, listen, the operating system in this is the same as the expensive iPad. You think that the trading application knows the difference in here? It doesn't. Okay. As long as you have enough memory on there, you're fine. So have at it. You don't even need a laptop anymore. You just need probably a tablet and you can execute every trade. Okay. By the way, some of the software now, amazing for the iPad. And I'm, not even so much thinkorswim. Okay. I love showing like Tastyworks. I'm actually going to show it really quick because I think it's that good. Okay. Absolutely love Tastyworks. It is by far, the best iPad application I think I've ever used. It's as good as their desktop application. That's why I make the argument. You don't even need a laptop anymore. All right. So you need an internet connection and a tablet, which is like $300. Number 2, this is not a membership. We don't auto renew or auto bill. We just don't. After, if you want to do this again, and I always stress this because people get upset like gym memberships and so forth. You want to do it again, it's $297. We don't do an introductory price. The only thing we do for the first 3 months, if you don't like it, we give you your money back. Again, like I made this comment earlier and I'll make it again. I want to make sure that you understand, we want you to be here, okay? If you're happy here. If you're not happy here, like, we get it, okay? There are 6,000 people that are on Theo, and I constantly say that while, I'm on. By the way, in the chat room, okay, we have 8 full-time instructors. I do an hour a day inside of the chat room as well. So it's, it doesn't matter whether you're co-founder of the company, who cares? We all do like an hour a day, and we actually a lot of days like today, you can actually hop in the chat room. You can enroll right now. You can hop in the chat room, and then you can see we're even going to do a chat after the close today. So we have more people than we know what to do with, and we actually have some chats that we do after the close. All right, number 3, we provide weekly update videos. You can follow all the moves and all the everything that we do. When I say all the moves, okay, if I change something in a portfolio, you're going to know about it. It's in the update video. I mean, I text and stuff out, but I want to give you insight to why I did certain things. Number 4, we archive everything. We understand you can't watch all day long. We archive everything. And, I tell people this all the time. For $297, okay, we give you this tremendous amount and tremendous accessibility. But I would rather you be overwhelmed than underwhelmed, okay? And it was our decision internally, like, let's just give everybody everything right off the bat. No more of this piecemeal, no more of this a la carte. We give you access to what you need to be successful in this business. We give you access to support in the business. So we archive everything. You can even access TheoTrade Mobile. We give you the ability to download TheoTrade Mobile, okay? And you can access and view stuff at your leisure. That's up to you. You can even speed stuff up, and slow it down, all right? Add your cell phone number when enrolling to receive, okay, trade ideas via text message, and you can, again, download for push notification. By the way, a few more questions answered here, and a few names came in. Again, it takes about 5 minutes before I see names come up. Lonnie M from Iowa, Randall G from California, Bob M from Kentucky, Steve G from Idaho, Joseph L from California. The names I just read off, I want to thank each and every one of you. Those are individuals that have now enrolled. As I said, it takes about 5 minutes before I can see the names actually populate in here. Just getting through some of the questions, and I'll pop into a couple more names here. Number 7, you can email us anytime, receive a response within 24 hours. The only thing I say is, like, don't email us on Friday afternoon with an hour to go to expiration, like, I'm on fire. Like, give us a little bit of lead time. We are traders, okay? Traders don't necessarily watch, like, I email people before the open or after the close, depends on what time zone. So about 4 months out of the year, I'm on Pacific time because I'm here in Arizona, we're on Pacific time. And about 8 months of the year, I live in the Virgin Islands. The Virgin Islands, we're actually on a schedule where part of the year, we don't even open the market until 10:30. We're on Atlantic time. So I answer all the emails before, okay? So just know you can email us and get a response. Number 8, you're going to gain access to everything we've done previous 7 years. Classes, coaching, trading sessions, archives, all searchable. Name any topic, and I bet you we've got an archive on it. Number 9, variations to trades are available inside of an IRA or with as little as $2,000 in the account. Got to remember, like, trading in the IRA is critical. In fact, I didn't make mention of this too much, but I'm going to now. This is my IRA, right? This is an IRA. So people say, I can't do that in my IRA. You do anything you want. This is tasty. Tasty. You can do anything you want inside of the IRA. So number 10, this is exactly what I'm referencing, okay? Have no fear, because we can help you get approved for options at several different brokerage firms. And when they approve you for everything. Listen, there are 30 riskless spots available today. Get results, okay? Take action, enroll for TheoTrade. You're not going to be disappointed in what we offer, and there's absolutely no risk to you. I'm going to answer a couple of just generalized questions that have also come up in the chat room. So there's a question, what are the specs in the hedge? Okay. The hedge, okay, depends on how many options you want to sell. So the specs in the hedge are quite simply, the inside hedge has to be spot on. I'm going to tell you a couple things about the inside hedge without giving everything away. It's obviously taught in the class. The inside hedge, though, is a shorter duration options hedge, shorter duration, okay? It uses a spread, it reduces volatility risk. The hedge, okay, is designed for a fast breaking market to the downside. It's the best way to explain it, meaning if the market crashes overnight, okay, The hedge is a safety net that's going to catch you. The hedge will work, okay, to reduce risk of whatever you've sold, but it depends on the ratio, and your own comfortability, well, deciphers that ratio. All right, onward and upward from there. So, by the way, a few more names coming in. Richard C. from New York, Peter H. from Washington, Paul O. from Canada. By the way, Paul from Canada, Canadian. Okay, there are several different brokerage firms that you want to use from Canada. You can email us on the side a little bit about that, because I want you to know right off the bat, some things are a little different in Canada. Spent a lot of time up in the Toronto area because obviously TD Ameritrade was owned by Toronto Dominion. All right, onward and upward. By the way, Don, it says ballpark how much the returns are offset by the hedges. Nominally, okay? You know, when you're talking about hedges, and you're talking about like how much are my returns reduced by hedges, I want you to think of this. You can't operate without hedges. It's not about how much are my returns reduced by hedges. This is a business to which you can't be in without hedges. It's kind of like, you know, I'm an Uber driver, but I don't have, you know, a vehicle. You have to have that vehicle. Without it, you're nothing. Okay. You're out without it with nothing. By the way, some more names are trickling in. Brian R. from Washington. Again, it takes like 5 minutes for me to see the names. So a few more names are trickling in. So are the returns offset? They're not offset. Okay. It is an impenetrable staple that if you don't have it, you don't trade. If you're selling naked puts in this market, okay, if you're in this business right now and you sell naked puts with no hedge, I want nothing to do with it. Don't come here. Okay, you can't sell naked puts and survive the onslaught unless you want to get put to stock. That's a different story, but you can't survive this environment without hedging. If there's one thing I will tell you from 15 years of experience in the brokerage world, no one survives the sale of naked options without some degree of a hedge. And the hedge can't be put on after the fact. Okay, you have to put out the sacrificial lamb at all times, because if you don't sacrifice the lamb to the volcano, okay, you will anger the beast. All right, what are you going to do if the market crashes overnight? Everybody always convinces themselves, me, I'll get out. Really? Really? Okay, because when the big moves come, they always happen overnight. Like today, big move came. Today happened to be the upside, but neither here nor there. Okay, you just had this massive 2% move up. All right, on one little announcement. All right. Says Don, good day to sell some Russells, you know, Russell calls. Yeah, actually, yeah, the Russell might work quite well today. I haven't looked at the RTY. I don't trade too much Russell lately. Not that it's bad. It's just kind of fallen off the radar screen. I've been really heavily into the ES and into the micros lately. But yeah, I know that the Russell's at the upper edge of the expected move. We're home. Somebody said, under what conditions do the inflection point spreads not work? Volatility would have to completely collapse. And then when volatility does completely collapse, when I say collapse, like VIX back down, like under that 14 region, and the inflection point spread will start to like cave in. But we just alter how we actually use the hedge and you'll be okay again. But I want you to know, yeah, like collapse in volatility, it's not going to work as well, not even close. Can absolutely be done in different retirement accounts. Absolutely. Okay. Oh, by the way, somebody said, what kind of hedges do you have for calls? Similar, very, very similar. Inflection point spread can work in both bullish or bearish markets. And then, but somebody said, what broker do you use for options on futures? I use Tastyworks. Okay, I trade almost all the options on futures. So obviously, I've got some positions here on thinkorswim. But in the heaviest instance, I actually trade. And again, there's several accounts in here, but I trade heavily on Tastyworks for options and futures. They're just better. They get it. By the way, Tastyworks is from the same founders as thinkorswim. They're kind of the up and comer at this point in time. All right, listen, I've gone way over in time. I want to make sure I got everybody's questions answered. Again, get results. Like learn how to do this. There's one thing. I don't want you to be kicking yourself 6 months from now, 9 months from now. Get into TheoTrade. Start watching some of the videos. Okay. It's, you know, start small. You don't have to do this overnight. I know everybody wants, you know, instant gratification, instant coffee, instant tea. This, okay, you got to learn a little bit. And I don't mean to intimidate anybody, but you're going to learn a little bit. I don't want you to just rush out and throw some trades on. Okay. We'll hold your hand. We'll answer emails. We'll do everything we can to support you. Okay. check it out over the next 3 months. If it's not for you, receive your money back at any time. Again, go to TheoTrade.com/IPT. I'll throw it up there one more time. Make sure to include your phone number for the text messages. It's TheoTrade.com/IPT. I want to thank each and every one of you. We'll stay on for a couple of minutes to answer some more questions. I apologize. There's a few more names flowing in right now that I didn't necessarily answer. Okay, we'll try to answer those kind of in real time here by typing the message to you. Thanks, everybody. Have a wonderful afternoon.